Good morning, good afternoon, good evening. I've just pressed the wrong button, but there you go. It's a live show. All right, let's get straight into it. There was a reason for that. I was pressing the button on TikTok, but never mind. Can't do 5,000 things at once, even though I do try to. We've got Jerome Powell coming up in a minute, so we're all set, ready for the Grim Reaper to make his way onto the stage. Let's get ready for that. Let's bring the information that you need, all the tickers and all the links below if you want to check out all the information. All right, let's get ready. Let's check around the studio. Everything's fine, and we are ready to rock and roll. It is Fed Jerome Powell. What are the rates going to do today? You can see the market is really down. I was down 3% yesterday, 2.5% today, so that's 5% in 2 days. Perfectly normal, perfectly expected. Not a problem at all. Don't like seeing it, but it is what it is. Can't go up and up and up forever. The markets don't work like that as much as we'd love them to do so. Anyway, we're all set. We're all ready. It's going to be a big afternoon here live on the show. Welcome to all of you. Let's go for all our positions. So you can see I'm down at the moment. The Roth IRA is holding up. That's okay. That's predominantly Coca-Cola doing well. But at 63.5, we were at 66. So as you can see, 2.5 grand down now in a couple of days, which is perfectly acceptable for the amount of size of portfolio I've got and the amount of margin I've got. So we can live with that. Now then, I want to thank everyone for joining me today for the premiere of Eagle Pharmaceuticals. Most of my members did, which was absolutely great. Thank you very much. This was Eagle Pharmaceuticals. If you've missed it, here it is. It's just gone out 2 hours ago. Now then, this video is going to go right the way through. We're going to have Jerome Powell live on the show. We're going to get the rates in 27 minutes. Then we're going to get Jerome Powell speak live on the show, and then we're going to get we're going to go to the closing bell, close the bell, and then we've got our world premiere, which is Automotive review premiere. That's coming up, so hopefully you'll all join me for that. This video will take you directly to there, and this is the premiere that'll come up afterwards. All right, I'll give you the link in the chat so you can see it. Again, as always, I know you'll join me for the conversation and so on and so forth, and the review if you want that too. I've invited the CEO as part of the Meet the CEO series. So there we go. All right. Okay, great. Hopefully you'll join me for that at the end of this broadcast. All right. Okay. John says, should be interesting. Indeed, it should. All right. Let's see what we've got here now. This is the premiere where we're going to be at the end of today's show. You can already click a like there if you want to share it and be the first and all the rest of it. I hope you all also saw another video I put out about the Christmas card. This was the Christmas video card. You can all have. You don't even need to be live with me on Friday if you can't make it. You can go into the chat for the event on my music channel. This video will take you there. Do a super chat with your comment or email it, or I don't know, whichever way you want to do it, and I can do it for you. It's best if you are there though, because I'll give you the instructions on how to do it best. But to try and join me for Friday night for that event, I think it's going to be busy, so it'd be first come, first serve to do all the Christmas cards on Friday. I hope you all saw the video explaining what that was all about. All right, so you can get a video Christmas card, a very unique present, and you can get that made directly for you. Very personal. All right. What's the better motto right now before the meeting? Big time or what? Or wait, what's to be heard through the grapevine? Tio Roll, we're expecting a pause. There's nothing really, no surprise. It would be calamity if it was another hike, and it could be, and my portfolio could go down a long way, and I might be jumping ship and having to get out to protect my portfolio. Who knows? I'm not setting a limit order though. I would just sell my J&J 22 grand and I'd just buy it back lower. If that was the case, if I had to protect my portfolio, that's what I would do. I could have my finger on the J&J and just sell it. But, you know, whatever. We shall see. We shall see. Good evening, all. Good evening to you, Henrik. Okay. Now then, so I will set this live show to go directly now to the premiere. So let me customize that. So that will go directly to REE. Seeing someone rebounding, seeing some rebound already, says Jeffrey Diamond. Yes, indeed. It's all part of it though, right? Okay, I've done that now. That video should, the live event you're watching right now will go directly into this, let me just double check. Yes, it will go directly into RE at 3:15 p.m. Central Time. Okay, that's now done. Let me jump in and welcome our guests from around the world. Let's go in and welcome our guests on LinkedIn. So we want to jump in there. Hello to all of you. Welcome. This is where I'm meeting my CEOs and so on and so forth. So thank you very much if you are watching me over there on LinkedIn. Let me just drop a quick hi all. Okay. Kick, if you're watching me there as well. Hi all. There you go. I should probably give you the link to the premiere afterwards as well. So let me just drop that into LinkedIn first of all. There's the premiere, and give it to our audience on Kick. Give it to my audience on Rumble. Okay, here we go. Thanks to all of you, and let's drop it into Facebook as well and X, so we have everybody's got everything we need, and even in Twitch as well. Still streaming on Twitch at the moment, but if we get any more hassle, we'll be taking it off. It's not worth the bother. Let me do that. Let me run that in there. Okay, and who else have I done? X, yes. Let me give it to you. There's our world premiere. Okay, we got some messages to read on X. So what do you think about gold? Well, I think a lot about gold. I think a lot about gold. I am buying a mine before it goes public in a few months. See my alpha, see my reviews see my reviews and meet the CEO. Let me give him that link. So he probably wants to see that. So let's go to there. And meet the CEO. Where's the latest one? That's the one I want. Okay. Share. Copy. Okay. And there we go. I'll reply to you, give you the information you might require. Thank you guys for loving and liking and reposting. I love it. Mike's always on it. Yes. All right. That's that. Okay, we're up to date with all of the comments. Try to reply to everybody, all my members' comments. Stock twits. Yes, we're all good. Okay, it's been a busy afternoon today. It's going to be a busy show today. We know that. We're up to nearly 8,000 views. What's currently trading, what's people seem to be following at the moment, a lot of 100 of you have watched the Eagle pharmaceuticals. Thank you so much for that. But of course, the Fed rate is doing well. Everyone's focusing on that at the moment. I think our Merry Christmas gift card is going to be popular. 88 views on that video already on this channel, which is a lot, right? I think we're going to get a lot of interest. If you want to book your Christmas card, let me know. Do a super chat, and I will already put it in the list because it's going to be busy on Friday. I'm absolutely 100% certain of that. All right. Anyway, good stuff. Looking forward to that. Should be a lot of fun, that. Let's go for all our positions. Virgin Galactic, that's down $200 today. Where's the other $1,000 come from then? Gold. S&P, I'm not in it. Amazon, I'm not in it. Apple, I'm not in it. NEE's gone up. I've made money on it. So where's it come from? I've lost 300 on end phase, but it is going back up. Coca-Cola, J&J's 190, but that's going back up. Kenvue, that's down $12. That's not really making a difference. Chevron's up. Tesla is moving up. Well, that's lost me 169. So it's a few little things. Rivian. I loaded Tesla's not cheap enough. McDonald's is doing well. Google's going down now, finally. So is Microsoft. Walmart, that's making me money. So it must be Robinhood when I get to Robinhood then. Yes, it is. Lost $148 there today, but I'm still up $1,500, so I'm fine. Absolutely fine. Right, now then, Jerome Powell will be speaking shortly live on my show, just my show, only my guest. Plug, that's $115. So really, is there anything to buy at the moment? Well, we should probably wait till Jerome Powell speaks in case he raises the rates, then we'll get a big drop. But Bitcoin is doing very well today, up 2%. So is my Polygon, 185. XRP, 147. We see a $7 price target on that. So really what I'm looking for is if I can buy Walmart, but it's up, so I don't want to buy when it's up. Microsoft, yes, but it's got to come down another 20%. Google's got to come down another 5% at least. McDonald's, it's up, so I'm not buying it. Rivian's not low enough. Tesla's not low enough. Chevron's going up, so I'm not buying that. Kenvue, I've got enough to last me. J&J, it's not down enough. It's going up. Coca-Cola's going up. Enphase hasn't gone cheap enough, so I'm not buying that. Next year energy, no, that's going up. Apple's going up. Amazon's going down, but I'm not in it. It's got to go down another 10, 20% at least. The S&P's got to come down about 5%. So there really isn't anything to buy at all, or sell for that matter. Okay, market will slingshot. I am bullish, Af Gorilla. What tells you that? What tells you that? What is the reason for that, I wonder? I'm always bullish for all kinds of reasons, but why are you saying particularly it's going to, maybe he'll shout at you for stimulating. Who's going to shout? Yeah, that's right. Jerome Powell's live on the show, talking directly to me, nobody else, and he's going to tell me off. I look forward to that. I look forward to that moment then. That'll be good for the channel, won't it? Right, that'll be good for the channel. Right, let me bring up to date any comments here on Discord. No, we're all good there. Live in the show, we're good there. Bring you up to date. Now then, the announcement of the rate will be in 15 minutes. 15 minutes is when the announcement will come out. So we're watching very, very closely. I've got my economic data ready to go. I've got my news ready to go. The Fed rate. This is what we're expecting, folks. We're expecting what we're expecting. 5.5, 5.5, and 5.5. We're all across the board, 100% expecting 5.5. So there's nothing really to shout about. It's all pretty much, there's the US interest rate. You can see how it's gone up. And we're hoping that we're just going to get a pause again, a pause again for the second time. We're not going to get there's no chance on hell, all right? I'll tell you now, there's no chance in hell that we're going to get a cut. That wouldn't be good either. That wouldn't be good either. It'd be a Paul Volcker. We don't expect that. But what we do expect is a pause. If we get a hike, it's going to come as a shock, and the markets are going to react. And they might not necessarily react badly. You can never tell how the markets are going to go. Anyway, more than likely they'll go down, but we don't know, all right? We just don't know the answer to that. Anyway, let's get ready. I'm in my Christmas jumper. As you can see, look, Santa Claus is there, look. Oh, Rudolph, I think, actually, isn't it? Yeah, Rudolph. So Rudolph's looking good. The studio is all dressed up for Christmas, but we've had a Santa rally so far. But is he going to bugger off down the road now and upset everybody? Let's see. Let's hope not, right? Tesla is a buy for me. Also, SoFi. I wouldn't touch SoFi. The CEO talks rubbish. Hey, Pottery. Dawn Potteris is in the channel. Right, Dawn, what you got to do is confirm this is you. Confirm this is you in the chat. All you got to do is go, yeah, that's me. Have you got time to Discord me? Or shall I wait? No, I've always got time. I've got time for all my members. All you've got to do is say, is that you? Sounds silly, but people pretend to be you to claim your benefits. Just go, is that me? And you, well, you don't say that. I say that. You say yes. Or no, that's a fraudster. Get him out. Don't upgrade that person. That's not me. Yes, this is me. So Potterus. And we're going to, in this case, normally we change the name to match on YouTube. But no, not this time. It's Potterus. We're leaving it. Absolutely, we're leaving it, right? So it's my show. I'll do what I like. And I'm going to leave it. So here we go. So we're going to ban Dawn. We're going to ban her. We're going to send her back to Scotland and say, you think you're going to come on here and be a member? Right. I'm going to give you membership status. Now you're a superstar now. As long as you're a member, you'll be on the channel. Add as a friend. Go and accept the friendship request now. I will delete it in 1 minute because you will get lots of people try to pretend to be me. So go and claim your friend request now. After a minute, I'll delete it because you'll get 100 people pretending to be me and it gets very confusing. They try and scam you. You don't want that. You don't want that. Right. You can now see Potterus. You can now see all of the exclusive content. Has she accepted it yet? Add friend. Come on. There you go. Now I can remove her and ban her just to sort of, just for spite. Anyway, there we go. That's now done. Now then, you can see all these channels. You are a member of our channel and you're very, very welcome. Now then, as a silver member, you can go on the homepage of my channel. See, didn't tell you about that, did I? Extra benefit. Would you like to go on the homepage of my channel right there? I know you would because you've already been talking about your pots and pans and we all know all about it. We all know all about it. So go to the channel. There's her channel. She's now got 14 subscribers. She had 1 yesterday, right? Now, this isn't a Dawn show. We're not doing Dawn all day today. We're not doing that. Not doing that. But what I have to do is add her now to the homepage because she's a silver member, all right? She's a silver member now. She's like nearly royalty. Gold is royalty. She's nearly royalty, though. Right, let me go into the customization. Let me add you as a latest member to the to here. Featured members, edit section contents, and add any channel. Here we go. Potterus. There we go. Let's put her in there. All right then. Okay, you are done. You're on the list. Now then. If I go to the homepage of my channel and I refresh this, you will see, it might take a minute, but you will see that you are here. View all. It might take a minute to come through. There you go. You are now on the homepage of my YouTube channel, which is great. Because everyone can go and subscribe to you and you're featured on the homepage of my YouTube channel. So if anybody wants to go and follow Dawn Potterus, Poo Chicken Pottery. See, I remembered. I remember everything. You can't get one over on me. I remember it all. So I remember all the goods and the bads. So there you go. Be careful. Right? So there you go. That's all been done for you, Dawn. You are upgraded. You are in. You are on. And now, as a silver member, you can gain lots of perks and benefits, as well as a 20-minute fundraiser, 20-minute concert. You get a free request on Friday night's concert on this Friday in the music show. I'll be here on Friday if you want to come and join me. It's featured on the homepage of this channel. And there is the show on Friday. Come and join us. And as a new member, you get your first song for free. Oh, yes. Only the first one. After that, you got to pay for it. It's very, very expensive. Very, very expensive stuff. All right. Okay, let's read the comments. I hope something went wrong for Alpha Spread because plug power is gone. I hope something went wrong. I hope something went wrong with Alpha Spread because plug power is gone. What do you mean plug power is gone? I'm an Alpha Spread. Let me type in plug. There's plug power. And there is plug. What do you mean it's gone? That's plug power. Mitch, what are you talking about? Don't try and get one over on me. Look, and there's my review. There's my review right there. Look, plug. Don't tell me. There's my review and everything. Plug earnings. So there you go. Plug is there. Everything works. Everything works. I'll check it. Don't you worry about that. I'll check it. Right, we've got 7 minutes to go. A cut is possible. It was talked about. No, not a chance, Jeffrey Diamond. Not a chance, because no news will come out, and he will just leave it like it is. The elections will start cutting rates to help Biden with a good market. Thank you. You're very welcome. Martyn, did you have loads of groupies when you were famous recording artist? I wasn't that famous, really. I mean, I have toured all over the world and have entertained millions of people, I guess, over the years, but my groupies were little old ladies. My audience. That's why my audience don't watch me on YouTube. My biggest audience, they're older. I mean, I'm 50 now, so they must be in their 60s and 70s now. My audience, so you know, they don't watch me on YouTube. They watch me in live concerts when I put on live shows. So I had quite a few people that follow me around on minibuses and coaches, put on trips and day trips away to come and see the show. Yeah. Good afternoon, everyone. I'm just over here waiting for was it Debbie Downer? Mark Saxby. Thanks. That's very cool. Yes, it is very cool, isn't it? The information valuation. The information valuation is gone. The information valuation. It wasn't there. The intrinsic value wasn't there because there's parts missing to their information that they're providing us. So it wasn't there before. If it was there before, and you're right and I'm wrong, it's because it's being updated. But there's no issue. It's just being updated. But plug is fine. Plug isn't going anywhere. Hi, Niels. They're candles. They're candles? What do you mean by the candles? I understand what a candle chart is, but what do you mean by that? You've got me confused now, mate. Right, 5 minutes to go. Let's get ready to rumble. It's getting exciting. Now, if you just tuned in, click subscribe and ring the bell. Smash the like button. We've got 3 minutes to go. Let's get the likes moving, shall we? This is going to be a big show this afternoon. So let's do it. Mr. Mini-Me, bring him on the screen. Let's get the likes up. 70 watching. The most we're going to get is 32 now likes because 50% of you aren't signed in to Google. Get signed in so you can use YouTube properly. You don't have to have a YouTube channel. I know it says you create a channel. People go, oh, I got to have a channel. Doesn't mean you got a broadcast. You just have a channel. That's all. Right. So you ready? How many likes have we got? 20 likes and there's 75. We should have 33 likes. You ready? I'm going to refresh it. 3, 2, 1. Boom. 27. We need 6 more likes. And we've got 3 minutes to go before the review, before Jerome Powell gives us the numbers, and then we've got him live on the stage. And all the action then kicks in. Are you ready? Okay, I'll do it again. In 5, 4, 3, 2, 1. 27 is now 33. Yes, we done it. We smashed it. That's more than I deserve. That's brilliant. That's everybody that can sign in has signed in. Brilliant, because it's always 50%. All right, then. Let's go. Now we got the Bloomberg feed here. Countdown to the Fed decision. This is what we're going to hear from.
Yeah, I think the narrative shifted very quickly. Remember, nobody wanted to buy treasuries to now everyone sort of falling over themselves to buy treasuries even with the move. It is disquieting, but I think it tells you that price action can be driven by positioning often. And so we have to be careful. But I think you take a step back. Is monetary policy restrictive? Yes. Is the economy slowing down? Yes. Inflation is declining. I think that's a good environment for fixed income. All the money sitting out in cash is going to start to come out and look for value.
Well, that's right where I wanted to go.
Yep.
Is your stunning call of price up and yield
straight
down,
into,
down, down? Is it that
straight
wall
into
of
Johnson & Johnson?
Cash?
That's where it's going to go.
There is some of that, yes, because I think that money has felt.
That's why I'm in the biggest position of
J&J. 5%. As the Fed starts to cut rates, what about their reinvestment risk? And if the Fed's cutting 50 basis points, or the market should price in the total amount of cuts. If we're talking 200, 300 basis points.
2 minutes to go.
That cash is not going to look that.
We're going to keep the feed coming through.
Why I think you're seeing people now thinking about
what do I think of gold mining stocks?
And you start looking at valuations.
Well, we had
the
let me just say to you.
Now,
hang on. We've got a question here from Row 10 Cheese. I've just had the CEO. I interviewed the CEO at the New York Stock Exchange about a brand new mine with AI technology. It's private. It's pre-IPOing later in the year. It's registering with the SEC in the next few days. And I have just bought the mine. Just bought it now. As a private sale. I've got a convertible note which will convert into shares once it goes pre-IPO. If you want to know all about that mine and that gold mine with AI technology, exclusive AI technology, you might want to check out our most recent video of Meet the CEO when I actually spoke to the CEO. Where is it now? Meet the CEO. I've just there we go. There it is there on the homepage of my channel. This is Jeff, one of my mates, and from the New York Stock Exchange. So let me share with you the link if you want to know about gold mines. There is the video that you want to see from a gold mine that's about to go as a public traded company. It's just registering now with the SEC. You can buy it as a private company right now. I've just bought some. Yes, I own a gold mine. As a convertible note. And if anybody else wants to be in on that before, let me know and I'll put you in touch with the CEO. I'm meeting all the CEOs from the New York Stock Exchange now. So if you want any of that information, just become a member, stay informed. Right, here we go. News is imminent.
Unemployment call. Do they then make those also more?
Here we go.
It's just that's
we
really
got to
where
get to the announcement. When I hear the word expectations, all my radar goes up.
Here it comes.
They react to the data. They react to what
the
we're
rate
see in 20 seconds. Jeff.
And then Chairman Powell's got to try and clean it all up in about 30 minutes time and 20 seconds. 20 seconds away from the Fed decision. The scores look like this going into it. The equity market just about positive by 0.1% on the S&P 500, up 0.1% on the Nasdaq. In the bond market, your 2-year yield shaping up as follows. The 2-year 4.66, the 10-year 4.15. With your Fed decision, here's Mike McKee.
Doves fly at the Fed as officials signal they are done raising rates.
Yes!
Instead, raising the number of rate cuts they see next year. Officials left the overnight rate unchanged at 5.25%
this is
to
great.
5.5%.
No more rate hikes.
Confirmed.
Woohoo!
The money quote from the statement gets a
up goes the port. Up we go.
In determining the extent of any additional policy
here we go
that may be appropriate to return inflation to 2%. The dot plot, meanwhile, sees 75 basis points of cuts next year. One more move than they saw in September.
This is great.
The dispersion is wide, however, with
big cuts next year. Get on in.
3 cuts, 5 seeing
it's going to be crazy.
2025.
Oh yes, here we go.
Cuts, 1 down from September.
You want to get in now?
2 more in 2026.
Right, what can I buy?
What
can I buy? Because that is going to be great. Turn on the margin. Here we go. What can I buy? What's down? Virgin Galactic's going up. I'm not buying any more. Palantir. Ooh, we're down. We're down on a month. We're down on a month for 14. There's a bit of that to go. I don't want to jump too much. Gold is going up. Oh, yes. Oh, there goes gold. I'm saving it for the gold mine, but up we go. The S&P is going to skyrocket. Here it goes. Amazon. Oh, there's going to be some... you know what? This is going to be huge. I'm already going to go green. Let's get it green. Even though I'm not green, I'm going to be green any second. We've got no rates and the rates are going to come down. No more rate hikes. This is absolutely bonkers. You're going to make some money now. So let's get ready. There really isn't anything that's, I don't want to just buy like a flipping crazy man because we've already had the pump. But it's going to go up now. Everything that we're in is going to go up now. Robinhood, here it goes. The news is just getting out. It's only just getting out. You could just go all in and buy like crazy and scalp it, but you got to be responsible because there'll be profit taking, right? So if you are going to jump on in now, just be careful. There'll be profit taking. There's nothing wrong with buying. This is the go signal we've been waiting for 2.5 years, and it's going. And it's going to be FOMO now. And I don't want to be the guy who jumps in on FOMO, right? I'm not doing that. That's irresponsible. I've turned my studio green before it goes green because I'm fully invested and I want to clear down margin. I don't want to buy any more. As tempting as it is to just buy everything at this stage. 2.5 years we waited for this. Everybody should be very, very happy. Very, very happy. 2.5 years, you can see the presenters are jumping up and down. Everyone's jumping up and down.
Moves on.
We could end up getting a sub 4% 10-year yield by the end of this trading session as people parse through this. To me, the fact that this is unequivocally dovish, that they endorse the Fed's idea, that the market's idea of rate cuts, and then some.
Oh my gosh, it's going to go ballistic. Here we go. We're going to go green any second now. I really want some S&P, but I don't know if I want to overpay it though. It is good. I've got $50,000 of margin. You've got to at some point say that's enough. My rate's going to come down with Robinhood. It's going to come down. Let me read the comments here, folks. This is very exciting. We got Jerome Powell live on the show in 24 minutes. We're going to be there live. You're going to be there with me. Let me see how many people are watching. Everyone smash the like button. This is the day we have waited for 2.5 years. The rates are going to be coming down several times next year. It is go time. This is very, very good, right? No more rate hikes and things are going to go up. So my margin's going to get cheaper. The stocks are going to go up. But remember, we priced this in. We expect this. You don't want to just buy. You want to, now you've got the buy signal, you want to wait for the sell-off to come and buy a dip. Don't just buy everything. You can buy now. I've already bought at the bottom, but you want to buy when we get a dip. Just hold back. I know it's tempting to buy everything. Virgin Galactic, there'll be some trimming off. Palantir's going straight up. Gold is going through the bloody roof. It's going to be a 40% rise this year on gold. The money is going to come flooding in now, but I would wait if I was you. The S&P is going to go up like crazy. It's up 0.5% already. I would like to buy it, but I don't think you should be jumping on it just yet if you're not in it. Certain stocks, yes, the ones that are down now, buy them. But Apple, Microsoft, all of this stuff, it has to trim. When it pulls back, then buy it. I really do think that we're going green now. We're going to go very green in a minute when the news starts to filter out. It's going to be big. Yes, said Francesco. Happy New Year. Merry Christmas. I was half right, Martyn. Cuts coming next year. Yes. Boom. Boom. Jeffrey Diamond. Let's get excited. PayPal is about to go up. This is great. Yes, finally. Buy. Steady on, guys. Do shop wisely. End phase energy at 1% in 4 minutes. I know. It's gonna go absolutely bonkers. The bottom is in. This is it. You don't want to just buy everything though. What have I missed? We've just heard from the Fed that there's no more rate hikes. None. Done. They are done with raising rates. Interest rates are coming down at least 3 or 4 times next year. It's go. Buy everything. Get Jerome on the blower, Martyn. He'll be live on the show in 20 minutes. The S&P is up 0.5%. We've got Amazon now. I'm going to wait for a buy. I'm going to wait for a buy, though, on all of that. I'm not going to just buy everything. Rates unchanged. Rate cuts next year. Buy Tesla. Tesla. It is down 2%. No. I'm already in. I've got 50 grand of margin. I don't want to just make it 60, 70 grand just out of the bloody hell. I'm already in. I bought it already. I'm already up. There'll be some profit taking, but we can buy back with confidence now. I'm already all in with 50k. Mate, I'm the same. My portfolio is 117,000. I'm in with 50 grand's worth of margin. You cannot just keep buying on the way up. That's crazy. It's great, but if you're already invested, like we all are, then you just got to sit back now and go, let all the fools, all the lemmings jump on in. You don't need to buy anything, right? Okay. You can see Bloomberg. They're smiling. Like everyone's going, I'm getting rich now. This is great. All right. Well, it's about to happen. You're about to start to see it go read. Oh, look at my Roth IRA. My Roth IRA is going up. Here we go. It's showtime. 65,000. We could hit $70,000 today. My all-time high is 66. It's going to hit 65 in a second, and then we'll go back to 66, and we could be at 70,000. There's 65,000. There's 65. We could hit 66,000 today. My portfolio has just gone through $100,000. There we go, $101,000. Here it goes. I had to buy some J&J. J&J is the bottom. No question about it. J&J is the bottom. You could, I am down on J&J, so I could buy, but I've got enough. I have to stop myself from buying. I can't just buy. I've already got 50 grand. There's 65, 150, $101,000 now in my portfolio. This is great. This is very, very, very good. I could be at 100,000 by the end of the year. That was my target. That was always what was planned. But don't just buy everything. Here it goes now. 65,183. We've got 20 minutes before Jerome Powell speaks. FOMO is kicking in. Everybody's buying everything. It's not going to take very long at all before I hit $70,000. 65,196. There's 65,2. 65,2. Here we go. Oh my gosh. This is going to be a great day. This is the day we've waited 2.5 years for. What do you want to buy? Fun fact, most US recessions were after first cut rate. But not this time, though. Not to spoil the party. I thought it was interesting to know it is, but it's not this time. The last time I was up this much, when I looked, when I took the blue Pfizer pill. What time? WTAF? What's that? What's that? Let's get a squeeze now. We could certainly get a squeeze on Virgin Galactic. That could happen if we break 236. That could start to squeeze acceleration. Palantir is going up. You've just got to hold off now. I mean, you can't buy the things that are already overbought. they will trim. They definitely will trim. You've got to be sensible about it. Next year at Energy, there'll be profit taking. And as soon as you get a dip, you buy the dip. But don't just buy anything. End-phase Energy is $100. This could be $120 by the end of the session. I don't know what to start with. We're now at 65,276. It could be 70,000 by the end of the session. We're gaining speed. Martyn's daily candle has taken the blue pill. PayPal. What's the actual? I don't understand the question, Buckaroony. I don't understand the question. Hit subscribe and ring the bell and get rid of that one. There you go. Has everyone tapped the like button? Every single person should be tapping the like button now. 2.5 years of work here. Smash the like button. Come on, guys. We've got 46, but we've got 50%. That's it. And the other half aren't signed in. They can't like if they wanted to. Smash the like button. We're going up now. This is very, very good. Now, we've got Jerome Powell speaking in 15 minutes. It's going to be a frenzy. Get ready. We've not even started yet. Here we go. Let's have a look now. We've got Virgin Galactic is just trimming. See what I mean? Don't think it is a go to buy. It is green. It's bullish. It's great. It's fantastic. You've got the bottom of the market. However, you've already bought the market at the bottom. If you've been investing with me the last 2.5 years, you've already done that. So now what you need to be doing is waiting for the pullback, but you can buy now with confidence, but you're already in. So see the trimming? See the trimming? See that? If anybody had just bought there, they'd already be out with the money. We know it's going up. What we want now is to wait for Jerome Powell to say something that just goes burp, and then you buy. Don't buy the moment the news came out. Hold. Just like William Wallace. The ones that are down, oversold, they're flying up. Look at my next year at Energy. What have I just made so far? I mean, I'm up. Today's return. Let me refresh that because that's not right. Today's return isn't negative. Oh, yes. Today's profit. Look, I've made $112 today on that one stock, right? So I'm not going to buy it on the way up. We're going to leave it. We're going to leave it now. End-phase Energy. I've made $60 today. Coca-Cola, I've made $56. J&J's going up. Oversold. I'm still down, but not going to buy any more. Got 25 grand there. Don't need to buy any more. Kenvue's going up. Chevron's going up. I can start to take some profit soon. Rivian, McDonald's, Google. This is very exciting. Is everybody excited as much as I am? I hope so. We are now at 6. Hello, smash the like button. Hang on.
Jordan Allen has become a member. Mash the like button and subscribe to stay ahead of the curve. Curved up arrow. Don't FOMO.
Don't FOMO. Absolutely right. It is a green light to buy, but you've got to buy at the right time. You don't just chase the first moments it pumps. You've got to wait. Space under 230. Buy. 227. Yeah, once it hits 236, we're going to $4. I don't think there's anything to stop it now. It's a green light from everyone, and we've got 15 minutes to go before we hear from Jerome Powell. Everyone's excited. You can see the elation.
We're excited, but here's the risks. But I think it's going to be hard given they signed off on this statement and they signed off on this forecast, and this is about as dovish as we could have expected. This is more than I expected in terms of dovishness, and I think it's hard for him to walk it back, and I don't think he would be walking it back all that much given the fact that they all signed off on it.
Which is the reason why you're seeing
he's not going to add to it, but he's not going to push back too much.
Which is the reason why it's a good point that you're seeing an 18 basis point drop in the 2-year yield as time goes on. 4.54%. Greg, you said you'd push back against this.
Everyone's
really
smiling. You can see it on Bloomberg. Everyone's like really.
Hear from Chair Powell that could change your mind.
Everyone's face is just lit up now, right?
Much from Chair Powell. As I mentioned, I think the genie's out of the bottle. I think it's hard to walk this back.
No,
I think
impossible.
At some level, he is quite pleased, and rightfully so, right? They've seen
this is very good.
We've
got 15 minutes to go before everything goes bananas. This is fantastic. FOMO is in. Everyone's going to buy everything. We don't want to be doing that though, right? We are investors. We bought the bottom. We know we're going up. My portfolio is more than likely. It's going to be $70,000 today. It's more than likely potentially 100,000 by the end of the year. I don't think it will quite get there, but it certainly could be 70,000 by the end of today's session. That's easily doable. Let's see if it does. I've now got 101,200. You can see it going up really quickly, but a pause was priced in. So what you've got to do is now buy the pullbacks when they pull back. The stocks you've already bought at the bottom, you don't have to worry about those. You already bought those. You're already in. I've got 50 grand's worth of margin. Interest rate, my margin prices are going to come down, so I don't have to sell anything. I will just work and pay off the 50 grand every month. I'll put some money in and reduce it, and my dividend payments will cover it now. And this is one hell of a day. This is one hell of a day to be in the market, and I'm so excited. It took two. I'm just trying to repair it for TikTok. There we go. Is that better? 2.5 years of digging the ditches, and now it's payback time. Now we get our investment in. Smash the like button, guys. Everyone smash the like button. We're all going to make a lot of money today. And you all all my investors, my members, you're already in. You bought the bottom with me. You've been with me all along the journey. You can't but make money now. No one can lose money today. Anyone can make money. Remember what we've always said, anyone can make money in the stock market. The hard part is to keep it. So you buy the bottom, and now you can enjoy it going up. So we're all good. End phase energy is now 100. It's going to 101 any second now. Watch it. There you go. 101. Did it right there on the screen. 101. It could be 120 today. Coca-Cola, I'm up 8% now in just a month. Let's just have a pause a minute and respect the money, all right? Let's see what we've done here. This is one day. This is 1 week. It's about to turn green on the week. 1 month, I'm up 25%. In 3 months, I am now up... that's not right. Where am I looking? 1 month. There we go. In 1 month, I'm up 25%. In 1 month, 25%. That is quadruple. 10 times more than the market. 10 times more than the S&P. 10 times more than Warren Buffett. Year to date, we're up 14. We're up nearly 19% on the year to date. This is phenomenal. Let me look at my Roth IRA. My Roth IRA, we're looking at the week, the month, the 3 month, the year, the 1 year, all green, everything's green, up 8% on the year on my Roth, and I haven't done anything. That was the purpose of that account, just to hold it, just to see how it would compare to trading. As you can see, in a month, I've made nearly 26% now. Okay, this is good. I like it. We'll be at 50,000 in the next 5 minutes. We've got 10 minutes to go before Jerome Powell speaks. I predict my portfolio could hit $70,000 today. Wow. Everyone, if you've been with me for 2.5 years, you've been buying the dips, you've not been chasing the stock, you must have made money, and now you're in the day we get the green light. For the next 2 years now, we're going to be up and up and up. So if you are in now, you must be very, 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 very happy. Here goes Virgin Galactic. We've got 6 cents to go before it goes bonkers. If we go through 236, just watch what happens. It's very, very exciting. We've just gone through. We're just coming up to 66,000. We're just coming up to 66 grand. It could be $70,000 live on the show. I would virtually put money on it. I'm not a gambling man, but I would say very likely 95% I'm going to be 70,000 live on the show today. And that would be my biggest single rise. Even though we're up 28% in a month, that would be even better. Anyway, let's read the comments. Nice Christmas present for the USA. It is indeed. It is indeed. William Wallace, hold. Watching on my lunch break. Bruce Lee, how you doing? FOMO. Only if you buy it, it is. TLT average is going to pop like a cherry. Some red to green action visible now. I am so glad I did not sell anything. Exactly. I said, don't sell. How many times I've been consistent for 2.5 years? I went all in on margin when I knew it was going to, when the rates were coming down. I said I don't like using margin, but there is a time and a case for it. When you know we're approaching the bottom, you don't wait for the bottom, you buy the bottom before the good news comes. I put $50,000. You can see it on the screen. Look, $51,912 in margin. I mean, I've got another 30,000 I could put right now on margin. I'm not going to. I want a buffer because there will be profit taken. People have been sitting around for 2.5 years making very little money. Now we can make some money. So I don't want to buy on the way up. I bought the bottom. Now I got to wait for the trim off, put some more cash in the bank, pay off the margin. But I'm not going to pay off the margin by selling the stocks. That would be a big mistake. I want to own the stock. I want to keep the stock as it rises. I want to benefit from the dividend payments. But I do want to trim a little bit just because there'll be some dips and then buy the dips because people will take profit. Moy Guzman, thank you 100 times, Martyn. You're very, very welcome, mate. You've done it all yourself. I didn't do anything. I learned more from you guys. There's no doubt about it. I learned more from you. Most importantly, we can easily break 230. Oh, on Virgin Galactic, we could go to $4 today. We could absolutely go to $4. The only thing holding Virgin Galactic back was the interest rate. I'm surprised it hasn't gone quicker. Look, 230. Come on, 230, straight through. It should go straight to 237, 238, and then it can do $4. Absolutely. Nothing to really stop it. I'm surprised it's taking so long to get going, to be quite honest with you. But anyway, the S&P is running like a crazy man now. Amazon's going back up. Apple's going up. NEE, I'm not buying any of it. I'm waiting for pullbacks. I've already got everything. I've already got $102,000 invested. This is great. We're now at 101. Here comes 102 on end phase. Coca-Cola, I'm now at 8.5% up. J&J is going to go up now. I'm at the bottom. Kenvue's going up. Chevron's going up. Tesla's. We got 6 minutes to go before Jerome Powell speaks. Live on the show. We're waiting. This is very, very, very good news indeed. Very, very good. Rivian's going up. I'm not buying that. It's overpriced. McDonald's, I've got plenty of it. Google, I want it, but I'm not buying it now. Walmart, I'm waiting. That's up now. I can start the trim if I want to. Tesco's going down. Tilray Brands is rubbish. I'm not touching it. Robinhood, it's a 4X. I'm up 34% now. This could 4X easily within weeks. No problem at all. IonQ, 2 Deer, Rocket Labs. I'm on the money now. Plug Power is a massive gainer today. It's had a huge swing. It was down nearly 4%. It's just swung 6% in 5 minutes. So I'm not buying any more. I've got plenty there. I don't need to own any more. It's all about risk management. Rumble, rubbish. Funware, looks not doing anything. Stocks that aren't making any money are going nowhere, are still going nowhere. Faraday, if anything had any value now, it will move. If it's got no value, it won't go anywhere. And there's a perfect example. If there's no value, the stock won't move, no matter how bullish the world is. Because it's still down to the business. Why would you put your money in a business that's going bankrupt? You wouldn't do that. You just buy the S&P, to be quite honest. What can I spend $400 on? I'm looking forward to the next 5 years with you, Jose Quintana. Well, we're going to have definitely 2 years of growth now. Do you think Jay Powell might cheer us up even more? Yes. As he speaks, you will see the stock move. But you've got to buy the right thing. You've got to trim at the right time. So anyway, we've got 5 minutes to go. Jerome Powell will be live on the show. If you've just tuned in, subscribe and ring the bell. This is phenomenal day, the best day ever on our channel, bar none. There you go. Smash the like button, folks. Come on then. Everyone's getting excited. I'm excited for everybody here that everyone's going to make money. And we've got 101 watching. How many likes have we got now? 53. See, 50% all the time. Those of you that are watching that aren't signed into Google, please come be part of the family. Just create an account on Google. It's free. When it says you have to set up a YouTube channel, it doesn't mean you've got a broadcast. It just means you've got to have a channel. It doesn't mean anything. It's just your identity. Just sign up on Google. You can come in the chat. You can talk to us. You can leave a like. You can get involved. You just sat there incognito doing nothing, having no say. Be part of it. Taking a shot every time. Jay Powell mentions a rate cut. Hi. Yes, they want to hear him speak. That's exactly it. They're waiting for that. That's when it will really go. This isn't nothing. This isn't nothing, guys. We're just warming up. So you've still got the chance to buy, but don't buy on the pump. Let it pull back first. Otherwise, you're just buying the top price. We are going to keep going, but if you're down on something, I mean, say for example, see, it's different for everybody, but for me, I'm down 8% on next year energy. You might go, well, why don't you buy? Because you could double your position, halve your loss from -8 to -4, and then rise into it and trim it off. I could, but I don't need to. I've got $6,000 in it. All I want to do is achieve 100 grand. I'm not going to. It's all about risk management. I don't want 80 grand of margin, even though I could trim it off and make the profit. I don't need to take that risk because there will be profit taking. It will pull back, even if not much. You know, don't get greedy. Don't get greedy. Just keep your management right, keep your balance right, and enjoy it. Enjoy it. This is the best day we've had on the portfolio in the markets for 2.5 years. So celebrate, enjoy it. But here we go. I told you we'll break all-time highs. We are coming up now to 2 minutes to go before Jerome Powell speaks. We are now at just coming up to 66,000. 100% we're going to hit 67,000. We're more likely to hit 70,000 as well. But 67,000 is definitely happening. I don't know what can stop it, to be quite honest with you. Really. Anyway, let's get ready. We're about to bring Jerome Powell live onto the show. He's only on my show. It's not anywhere else. No one else can get him, just me.
Subhadra Japa, Michael Gapin, to the two of you, thank you. Just brilliant, as always. Michael Gapin over at Bank of America, back in a seat and good to see. Absolutely nailed it. Looking for 3 cuts to go into that median dot in 2024.
What do you mean he nailed it?
At least I think he's
I nailed it months ago.
Not just dates, but thresholds.
Bank of America, they're always 6 months behind me. What are you on about? He nailed it. I nailed it way before then.
Implied that in your projections.
Bank of America. I was way ahead of that.
Over the next hour.
Yeah, is lower inflation enough, right? It just by de facto, or do they have to see some other?
Whoa, okay, here we go.
And what are the parameters? What are the levels? These are important questions.
Come here to Google
right now
from Rumble, just to give the thumbs up. Hey, Eagle Eye! Eagle Eye's here. Eagle Eye is from Rumble. How are you doing? Great to have you here.
And go with where we think.
Thank you for being here, mate. Lovely.
They did not expect this. I did not expect this.
I did expect it. What are you on about? It's clearly obvious. If you don't spend half your time trying to influence stuff, these people driving up the wall, right? They make up stuff. They're influenced by stuff. They don't want to see what's going on. It was clear to me a year ago that we entered the bull market. I said it over and over again for the world to see on my show. I bought with margin. I went all in, just like I said I would.
Pictures and wait to see Chairman Powell into that room in Washington, D.C. I want to reflect on the quote.
Just about to hit 66.
Not even 2 weeks ago. It would be premature to conclude with confidence that we have achieved a sufficiently restrictive stance.
Of course, that's manipulation.
On when policy might ease. Lisa, you wonder, What changed in the last 2 weeks?
Nothing changed. They say that to calm the market. It's all manipulation.
It says it turns out it wasn't premature at all. And so if that's the case, what has shifted? Was it the CPI?
Nothing has changed. We all knew what was coming. You know what's coming. Stop trying to manipulate the market.
And not necessarily a one-off.
I'm surprised we haven't got Nancy Pelosi telling everybody that we're all about to go bust and sell everything, and then she'll buy it when it goes down. That's what these people do. That's what they do.
Of people that got this wrong.
No one got it wrong.
In this press conference,
no, I didn't get it wrong.
2 standard deviation moves. That's not.
Oh, it drives me bonkers. Here he comes. Showtime, everybody.
Precisely right, John. Somebody's stepping up.
The chairman of the Federal Reserve. Let's take a listen.
Showtime.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. As we approach the end of the year, it's natural to look back on the progress that has been made toward our dual mandate objectives. Inflation has eased from its highs, and this has come without a significant increase in unemployment. That's very good news. But inflation is still too high, ongoing progress in bringing it down is not assured, and the path forward is uncertain. As we look ahead to next year, I want to assure the American people that we're fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We've raised our policy interest rate by 5.25 percentage points and have continued to reduce our securities holdings at a brisk pace. Our actions have moved our policy rate well into restrictive territory, meaning that tight policy is putting downward pressure on economic activity and inflation, and the full effects of our tightening likely have not yet been felt. Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Given how far we have come, along with the uncertainties and risks that we face, the committee is proceeding carefully. We will make decisions about the extent of any additional policy firming and how long policy will remain restrictive based on the totality of the incoming data, the evolving outlook, and the balance of risks. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has slowed substantially from the outsized pace seen in the third quarter. Even so, GDP is on track to expand around 2.5% for the year as a whole, bolstered by strong consumer demand as well as improving supply conditions. After picking up somewhat over the summer, activity in the housing sector has flattened out and remains well below the levels of a year ago, largely reflecting higher mortgage rates. Higher interest rates also appear to be weighing on business fixed investment. In our summary of economic projections, committee participants revised up their assessments of GDP growth this year, but expect growth to cool, with the median projection falling to 1.4% next year. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 204,000 jobs per month, a strong pace that is nevertheless below that seen earlier in the year. The unemployment rate remains low at 3.7%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up since last year, particularly for individuals aged 25 to 54 years, and immigration has returned to pre-pandemic levels. Nominal wage growth appears to be easing, and job vacancies have declined. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. FOMC participants expect the rebalancing in the labor market to continue, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises somewhat from 3.8% at the end of this year to 4.1% at the end of next year. Inflation has eased over the past year, but remains above our longer-run goal of 2%. Based on the Consumer Price Index and other data, we estimate that total PCE prices rose 2.6% over the 12 months ending in November, and that, excluding the volatile food and energy categories, core PCE prices rose 3.1%. The lower inflation readings over the past several months are welcome, but we will need to see further evidence to build confidence that inflation is moving down sustainably toward our goal. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. As is evident from the SEP, we anticipate that the process of getting inflation all the way to 2% will take some time. The median projection in the SEP is 2.8% this year, falls to 2.4% next year, and reaches 2% in 2026. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5.25 percentage points, and we have decreased our securities holdings by more than $1 trillion. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25 to 5.5%, and to continue the process of significantly reducing our securities holdings. While we believe that our policy rate is likely at or near its peak for this tightening cycle, the economy has surprised forecasters in many ways since the pandemic, and ongoing progress toward our 2% inflation objective is not assured. We are prepared to tighten policy further if appropriate. We're committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation sustainably down to 2% over time, and to keeping policy restrictive until we're confident that inflation is on a path to that objective. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. While participants do not view it as likely to be appropriate to raise interest rates further, neither do they want to take the possibility off the table. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 4.6% at the end of 2024, 3.6% at the end of 2025, and 2.9% at the end of 2026, still above the median longer-term rate. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path of policy will adjust as appropriate to foster our maximum employment and price stability goals. In light of the uncertainties and risks and how far we have come, the committee is proceeding carefully. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. In determining the extent of any additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
A lot of theatre there to try to say we can still raise rates.
Thank you, Chris Rugaber.
You know, it's going up. There's nothing they can do.
How should we interpret the addition of the word "any" before additional
pantomime at this point
firming in the statement? I mean, does that mean that you're pretty much done with rate hikes and the committee has shifted away from a tightening bias?
He's not going to say he's done. He'll always say I might come back and surprise you.
So
you listen.
Specifically on any, we do say that in determining the extent of any additional policy firming that may be appropriate, so any additional policy firming, that sentence. So we added the word any as an acknowledgement that we believe that we are likely at or near the peak rate for this cycle. Participants didn't write down additional hikes that we believe are likely, so that's what we wrote down. But participants also didn't want to take the possibility of further hikes off the table. So that's really what
we don't want to do that.
Mr. Chairman, the microphone, sorry. Steve Leisman, CNBC. Happy holidays, Mr. Chairman. Fed Governor Chris Waller said that if inflation continues to fall, then the Fed in the next several months could be cutting interest rates. I wonder if you could comment on whether you agree with Fed Governor Waller on that the Fed would become more restrictive if it didn't cut rates if inflation fell. Thank you, sir.
So, of course, I don't comment on any other officials, even those who work at the Fed. But I'll try to answer your question more broadly. So the way we're looking at it is really this. When we started out, right, we said the first question is how fast to move, and we moved very fast. The second question is, really how high to raise the policy rate, and that's really the question that we're still on here. We're very focused on that. As I mentioned, people generally think that we're at or near that, and think it's not likely that we will hike, although they don't take that possibility off the table. So that's when you get to that question, and that's your answer. There's a naturally it begins to be the next question, which is
everybody, please welcome our new guest, Chris Timms. Copy and paste, please.
So that's really the
next question. We've got a new guest here.
That's what people are thinking about and talking about. And I would just say this. We are seeing, strong growth that appears to be moderating. We're seeing a labor market that is coming back into balance by so many measures, and we're seeing inflation making real progress. These are the things we've been wanting to see. We can't know. We still have a ways to go. No one is declaring victory. That would be premature, and we can't be guaranteed of this progress. So we're moving carefully in making that assessment of whether we need to do more or not. That's really the question that we're on. But of course, the other question, the question of when will it become appropriate to begin dialing back the amount of policy restraint in place, that begins to come into view and is clearly a topic of discussion out in the world, and also a discussion for us at our meeting today.
Can you give some color as to the nature of that discussion today? Thank you.
Sure. So it comes up in this way today. Everybody wrote down an SEP forecast, so many people mentioned what their rate forecast was, and there was no back and forth, no attempt to sort of reach agreement, like this is what I wrote down, this is what I think, that kind of thing, and a preliminary kind of a discussion like that. Not everybody did that, but many people did. And I would say there's a general expectation that this will be a topic for us looking ahead. That's really what happened in today's meeting. I can't do the head count for you in real time, but that's generally what happened today.
Go to Rachel. Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. At this point, can you confidently say that the economy has avoided a recession and isn't heading for one now? And if the answer is no, I'm curious about what you'd still be looking for.
He won't agree to that, and you know it.
I think you can say that there's little basis for thinking that the economy is in a recession now. I would say that. I think there's always a probability that there will be a recession in the next year, and it's a meaningful probability no matter what the economy is doing. So it's always a real possibility. The question is it? So it's a possibility here. I have always felt,
no, it's not,
since the beginning, that there was a possibility because of the unusual situation.
You can't say there's not going to be a recession. You can't do that
in a way that enabled inflation to come down without the kind of large job losses that have often been associated with high inflation and tightening cycles. So far, that's what we're seeing. That's what many forecasters on and off the committee are seeing. This result is not guaranteed. It is far too early to declare victory. And there are certainly risks. It's certainly possible that the economy will behave in an unexpected way. It has done that repeatedly through in the post-pandemic period. Nonetheless, where we are is
Virgin Galactic is at breaking point.
That I mentioned.
2 more cents to go.
I'm curious if you're looking back
and
on
we
the
break
past
the
year,
3-month
you
cycle.
talked about navigating by the stars under cloudy skies. Can you talk about some of the ways in which the
And
economy
then short squeeze
surprised you
kicks
most
in.
this year, where you thought it would behave in one way and had to pivot to respond? Thanks.
So I think forecasters generally, if you go back a year, were very broadly forecasting a recession for this year, for 2023. And not only did that not happen, that includes Fed forecasters and really essentially all forecasters. A very high proportion of forecasters were expecting very weak growth or a recession. Not only did that not happen, we actually had a very strong year. And that was a combination of strong demand, but also real gains on the supply side. So this
Remember,
was the
economy
year
is different
when labor
than
force
the markets.
participation
Recession
picked
means
up,
the
where
bottom of
immigration
the
picked
market.
up, where the distortions to supply and demand from the pandemic, the shortages and the bottlenecks really began to unwind. So we had significant supply side gains with strong demand, and we got what looks like a 2.5% plus or a little more than that growth year at a time when potential growth this year might even have been higher than that, just because of the healing on the supply side. So that was a surprise to just about everybody. I think the inflation forecast is roughly what people wrote down a year ago, but
Look
in a
how
very different
relaxed he
setting.
is. Look at his
And I would
body
say the labor
language.
market, because of the stronger growth, has also been significantly better. If you look back at the S&P from a year ago, there was a significant increase in unemployment. That didn't really happen. We're still at 3.7%. So we've seen strong growth, still a tight labor market, but one
more
that's coming
cents to
back
go
into balance with the
to break
with
3-month
support from the
cycle.
supply side, a greater supply of labor. It's that's what we see, and that I think that combination was not anticipated broadly. There was a significant increase in unemployment.
Thanks,
It
Howard.
didn't really
Schneider with,
happen. We're still at
Reuters, and
3.7%.
Thanks for taking the questions. I wonder if you could give a little more color or detail on what motivates the lower rates next year, whether it's a coincidence, for example, that the spread between PCE inflation, core inflation, and the federal funds rate stays constant over the year. Are you simply calibrating against the fall in prices, in the price level that you're expecting, in the rate
Recession
of inflation
does
that you're
not mean the
expecting,
market's
as
down
opposed
3
to
months in a
supporting the
row.
economy?
It means the economy is
Nothing
down.
quite that
Spending
mechanical
is down.
happening. The
not
S&P
the
really
market.
is a bottoms up, built from the bottom up, right? So I think people are looking at what's happening in the economy, and I think if you look at the big difference from September in the S&P, the expectations for inflation this year, both headline and core, have come down, really significantly in 3 months. That's a big piece of this. At the same time, growth is turned out to be very strong in the third quarter, is slowing, we believe, as appropriate. And we've had several labor market reports which suggest, again, significant progress toward greater balance across a broad range of indicators. You're seeing so many of the indicators coming back to normal, not all of them. But so I think that people look at that and they write down basically each individual writes down a forecast and a
I
rate
started with
forecast that goes with that forecast. We
$5,000
tabulate
live on
them
the
and
show
publish it.
2.5 years
so
ago.
It isn't. You ask about
Now look.
Real rates. I take it. That is something that we're very conscious of and aware of and monitor, and it's certainly a big part of. It's a part of how we think about things, but really it's broader financial conditions that matter. And as you well know, it's so hard to know exactly what the real rate is or exactly how tight policy is at any given time. So
I said 67 today.
You couldn't follow that like it was a rule.
$5,000 2.5 years ago.
All the time, but it's certainly something that we're focused on. And indeed, if you look at the projections, I think the expectation would be that the real rate is declining as we move forward.
There it is.
It sounds like the discussion over
We predicted 67,000, now to 70.
I'm
It's
wondering,
easy doable.
just related to Steve's question, how the tactics of this play out, given the slowing of inflation and the fact that the deeper you get into 2024, the closer you get to a presidential election.
It's
Do you
breaking.
want to front load this, in other words?
Yeah, no, we don't think about political events. We don't think about politics. We think about what's the right thing to do for the economy. The minute we start thinking about those things, we just can't do that. We have to think, what's the right thing? We'll do the things that we think are right for the economy at the time when we think is the right time. That's what we'll always do. So I mentioned we're moving carefully. One of the things we're moving carefully about is that decision over, that assessment really over whether we've done enough, really. And you see that people are not writing down rate hikes. That's us thinking that we have done enough, but not feeling that really strongly, confidently, and not wanting to take the possibility of a rate hike off the table. Nonetheless, it's not the base case anymore, obviously, as it was, 60, 90 days ago. So that's how we're approaching things. And as I mentioned, we wrote down this SEP, and it talks about people have individual assessments of when it will be appropriate to start to dial back on the tight policy we have in place. And that's a discussion we'll be having going forward, but that's another assessment that we're going to make very carefully so as time goes forward.
Nick Timmeros of the Wall Street Journal. Chair Powell, you've argued over the last year that policy tightening started before you actually lifted off because the market anticipated your moves and tightened on your behalf. The market is now easing policy on your behalf by anticipating a funds rate by next September that's a full point below the current level, with cuts beginning around March. Is this something that you are broadly comfortable with?
Thank you, Stephen.
So this last year
2.5 years of work
for the
finally paying off.
Sort of seesaw thing back and forth we've had over the course of the year, of markets moving away and moving back and that kind of thing. So, and what I would just say is that we focus on what we have to do and how we need to use our tools to achieve our goals, and that's what we really focus on. And people are going to have different forecasts about the economy, and those are going to show up in market conditions, or they won't, but in any case, we have to do what we think is right. And, in the long run, it's important that financial conditions become aligned or are aligned with what we're trying to accomplish. And in the long run, they will be, of course, because we will do what it takes to get to our goals. And ultimately, that will mean that financial conditions will come along. But in the meantime, there can be back and forth, and I'm just focused on what's the right thing for us to do, and my colleagues are focused on that too.
The markets seem to think inflation is coming down credibly. Do you believe we're at the point where inflation is coming down credibly?
Listen, I welcome the progress. I think it's really good to see the progress that we're making. I think if you look at the 12-month measure, look at the 6-month measures, you see very low numbers. If you look at 12-month measures, you're still well above 2%. You're actually above 3% on core through November at PCE. That isn't to say I'm not calling into question the progress. It's great. We just need to see more. We need to see continued further progress toward getting back to 2%.
Virgin Galactic 236.
It's our job to restore.
We've just
price
broken
stability.
another all-time high.
It's one of our
67,126.
So we're very focused on doing that. As I mentioned, we're moving carefully at this point. We're pleased with the progress, but we see the need for further progress. And I think it's fair to say there is a lot of uncertainty about going forward. We've seen the economy move in surprising directions, so we're just going to need to see more further progress.
Gina Smilik, New York Times. Thanks for taking our questions. In the SEP from today, growth is notably below potential in 2024. If growth were to surprise us again in the way that it has for years now by being stronger than expected next year, would it still be possible to cut rates? Or put another way, is below trend growth necessary to cut rates, or would continued progress on inflation alone be sufficient?
So we'll look at the totality of the data. Growth is one thing. So is inflation, so is labor market data. So we'd look at the total as we make decisions about policy changes going forward.
There it goes.
All those things, and particularly
you'll never see it at 150 again. We bought the bottom.
The outlook.
I'm holding it to $100.
So that's what we'd be looking for.
There it goes.
If we have stronger growth, that'll be good for people. That'll be good for the labor market. It might actually mean that it takes a little longer to get inflation down to 2%. We will get it down to 2%, but if we see stronger growth, we will set policy according to what we actually see, and so that's how I would answer.
I guess the question I'm asking, if you don't mind a quick follow-up, I guess the question I'm asking is above-trend growth itself a problem?
It's only a problem it's not itself a problem. It's only a problem insofar as it makes it more difficult for us to achieve our goals. And if you have growth that's robust, what that will mean is probably will keep the labor market very strong. It probably will place some upward pressure on inflation. That could mean that it takes longer to get to 2% inflation. That could mean we need to keep rates higher for longer. It could even mean ultimately that we would need to hike again. It just is. It's the way our policy works.
We know it's not happening, and so do you.
Hi, Chair Powell. Neil Irwin with Axios. How do you interpret the state of the labor market right now? And in particular, you've referred even today to evidence that it's coming into better balance. What would you need to see to conclude that it has reached that balance?
So on the better balance side, there's just a lot of things. It's you see job growth still strong, but moving back down to more sustainable levels given population growth and labor force participation. The things that are not quite, but let me go on with that list. Claims are low. If you look at surveys of businesses, they're sort of the era of this frantic labor shortage are behind us, and they're seeing a shortage of labor as being significantly alleviated. If you look at shortages of workers, whereas they thought job availability was the highest it had ever been or close to it, that's now down to more normal levels by so many measures: participation, unemployment, so many measures, the unemployment, job openings, quits, all of those things. So wages are still running a bit above what would be consistent with 2% inflation over a long period of time. They've been gradually cooling off, but if wages are running around 4%, that's still a bit above, I would say. And I guess there are just a couple of other. The unemployment rate is very, very low, and these are. But I would just say overall, the development of the labor market has been very positive. It's been a good time for workers to find jobs and get solid wage increases.
Claire. Claire Jones, Financial Times. I'd say the mood among economists at the moment seems to be one of cautious optimism, which is somewhat corroborated by your forecast, by this sense that we are going to have a soft landing. Yeah, when we hear from the general public, there's a lot of discord about economic conditions. What do you think explains this disconnect, and does it matter for policymakers?
The economy is not the market.
It may
Rich
be
get richer, poor get poorer. Always.
While inflation is
just the way it
down,
is,
that's very good news. The price level is not coming down. Prices of some goods and services are coming down, but overall, in the aggregate, the price level is not good. So people are still living with high prices.
They are,
and that is something that people don't like. And what will happen with that is wages are now real wages are now positive, so that wages are now moving up more than inflation as inflation comes down, and so that might help improve the mood of people. But we see those public opinion surveys. The thing that we can do is to do our jobs, which is to use our tools to foster price stability, which has such great benefits over such long periods of time, and which is the thing that really enables us to work for and achieve an extended period of high employment, which is so beneficial for families and companies around the country.
Victoria. Hi, Victoria Guido with Politico. I wanted to ask, on the flip side of if things start to deteriorate rapidly, if we do fall into a recession, if we do start to see unemployment rise at sort of the levels of inflation that we're seeing now, how would you all think about that in terms of rate cuts? Would that be a sign that you've done your job?
Stick till the end, and I'll welcome you in properly.
If the economy looks like it's starting to fall into recession, if the jobless rate starts to rise.
That's not something we're hoping to see. Obviously, we're hoping to see something very different, which is continuation of what we have seen, which is the labor market coming into better balance without a significant increase in unemployment, inflation coming down without a significant increase in unemployment, and growth moderating without a significant increase in unemployment. That's what we're trying very much to achieve, and not something we're looking to see.
But would you take that as a signal that you should cut rates?
Obviously,
He's
we'll
not going to
look
say.
at the totality of the data, as I've mentioned a couple of times, and certainly the labor data would be important in that. And
be happy with the rise we got. It's steady
you can
and it's
describe
sound.
a situation like that where if there were the beginning of a recession or something like that, then yes, that would certainly weigh heavily in that decision.
Thank you, Whit. GM.
Michael McKee from Bloomberg Television and Radio. Mr. Chairman, you were, by your own admission, behind the curve in starting to raise rates to fight inflation. And you said earlier, again, the full effects of our tightening cycle have not yet been felt. How will you decide when to cut rates, and how will you ensure you're not behind the curve there?
So we're aware of the risk that we would hang on too long. We know that that's a risk, and we're
2:38.
very focused on not making that mistake.
Now it's showtime.
We do regard the two. We've come back into a better balance between the risk of overdoing it and the risk of underdoing it. Not only that, we were able to focus hard on the price stability mandate, and we're getting back to the point where, which is what you do when you're very far from one of the two mandates. You're getting now back to the point where both mandates are important, and they're more in balance too. So I think we'll be
$5,000
keeping that in mind as we make policy
67
going forward.
in 2.5
and the things
years.
we'll be looking at, I've
No
already
shorts,
described. We're
no
obviously
options.
looking hard at what's happening with demand, and what we see the
Just
same thing
sound
other people see, which
value
is a strong
investment.
economy, which really put up quite a performance in 2023. We see good evidence and good reason to believe
Virgin's
that
going.
growth will come in lower
The squeeze
next
will
year.
come soon.
And you see what the forecasts are. I think the median growth, median participant
$4
wrote
easy.
down 1.4% growth, but we'll have to see. It's very hard to predict. We'll also be looking to see progress on inflation and the labor market remaining strong, but ideally without seeing the kind of large increase in unemployment that happens sometimes.
When you begin the cutting cycle, will it be essentially run the same way you do it now with raising rates, where you basically do trial and error, cut and see what happens, or will you tie it to some particular measure of progress?
We haven't typically tried to articulate, with one exception, really specific target levels, which was, some of you will remember the thresholds that we used in, 2013. The answer is, these are things that we haven't, really worked out yet. We're sort of just at the beginning of that discussion.
Edward. Thank you, Mr. Chairman. Edward Lawrence with Fox Business. So if the Fed cuts rates, as the dot plot is showing, about 75 basis points, does that signal or that there's a belief of weakness next year in the economy?
It wouldn't, if that were, first of all, let me just say, that isn't a plan. That's just accumulating what people wrote down. So that's not something, this, but allow me to say it again. We don't debate or discuss what the right, whose SEP is right. We just say what they are, and we tabulate them and publish them. So it's important for people to know that. But it wouldn't need to be a sign of, it could just be a sign that the economy is normalizing and it doesn't need the tight policy. It depends on, the economy can evolve in many different ways, right? So, but it could be more what I just described.
And you focused on core inflation. We've heard from in other meetings. How sticky is core inflation right now?
Well, that's what we're finding out, and we've seen real progress in core inflation. It has been sticky, and famously the service sector is thought to be stickier, but we've actually seen reasonable progress in non-housing services, which was the area where you would expect to see less progress. We are seeing some progress there, though. In fact, all three of the categories of core are now contributing goods, housing services, non-housing services, they're all contributing.
I said
in different-
$67,000 would be an easy win.
Report by report.
More than
So,
likely, 70,000 today. From $5,000. Look.
Katerina Saraiva, Bloomberg News. Thanks for taking our questions. I just wanted to ask a little bit about, we had some pretty positive data this morning and yesterday. I'm assuming those were not incorporated into the forecasts we see today. But I just wanted to ask, how that kind of adds to your thinking, on the inflation outlook.
Right. So we got CPI the morning of the first day, and we got PPI the next day, which informs the translation into PCE. So it's very, very late in the game, but nonetheless, participants are allowed to, encouraged to update their SEP forecasts until probably mid-morning today. After that, so staff has to accumulate all of that and create the documents that you see. So until about mid-morning, maybe late morning, it's okay to update. And I believe some people did update their forecasts based on what we saw today.
Okay, and you see, how are you, when you think about, starting to think about the rate cuts next year or whenever they come, how do you think about the economy we're in now, kind of post-pandemic? Do you think that there's been significant structural shifts, and is that going to change how you look at a rate cut path?
The question of whether there have been fundamental structural shifts is really hard to know the answer, and a very interesting one right now. The one that would affect, one that comes to mind, though, is just the question of where the neutral rate of interest is. And so, for example, if it's risen, and I'm not saying that it has, but if it were to have risen,
I will
that
answer
would
that
mean that
at the end of this
interest rates would
presentation.
need to be a little bit higher to convey the same level of restriction. The thing is, we're not really going to know that. People will be writing papers about that 10 years from now and still fighting about it. So it's just that it's going to be uncertain. So we're going to be making policy in this difficult, uncertain, really unprecedented environment. Someone once said, you know the natural rate of interest by its works, and that's really right. But that's very difficult because policy operates with a lag. So it's one of the reasons why we slowed down this year. We started slowing down at this meeting last year, reducing the pace at which we were adding restriction. And over the course of this year, we really slowed down a lot to give those lags time to work. In terms of demand, has demand shifted more away from services into goods? You can make a case for that the shift back into services has not been complete, and it doesn't look like it's ongoing, but I don't know if that's right. Maybe people just bought so much stuff that they temporarily don't want any more stuff. They haven't got any place to put it.
They bought so much stuff.
Go to Jennifer.
That's funny. I'll give him that.
Thank
I
you,
bought
Chair
loads
Powell.
of
Jennifer
stuff.
Schonberger with Yahoo Finance. You said back in July that you needed to start cutting rates before getting to 2% inflation. As you mentioned,
It's Amy
PCE
Winehouse.
inflation is now running at 3.5% on core. On a 6-month annual basis, core PCE is running at 2.5%. Though when you look at super core and shelter, they are, of course, stickier. So in looking at the different components of the data, how much closer do you have to get to 2% before you consider cutting rates?
I mean, the reason you wouldn't wait to get to 2% to cut rates is that policy would be too late. I mean, you'd want to be reducing restriction on the economy well before 2%, because before you get to 2%, so you don't overshoot. If we think of restrictive policy as weighing on economic activity, it takes a while for policy to get into the economy, affect economic activity, and affect inflation. So I can't give you a precise answer, but if you look at what's in the SEP, and I think you'll see a reasonable estimate of the time lags and things like that it would take.
Do you think below 3% would be reasonable?
I wouldn't want to identify one precise point, because I would be able to look back then and probably find out that it turned out not to be right. But we'll be looking at it and looking at the broad collection of factors.
Hi,
Chair Powell, Jean Young with Market News. Wanted to go back to the stickiness of inflation question. Over the past couple of years, a lot of central bankers have talked about the more difficult last mile of getting inflation back down to 2%. Yet it's also been surprising how fast inflation has come down this year. I'm curious, do you think something has changed in our understanding of inflation? Or do you subscribe to this notion still, or is it something different about the U.S. economy? Thank you.
I think this. We felt since the beginning that it would be a combination of two factors. The first factor is just the unwinding of what happened in the pandemic, the distortions to supply and demand, and the second thing would be our policy, which was weighing on aggregate demand and actually making it easier for the supply side to recover because of lower demand. We thought those two things were going to be necessary. Sorry, say the last part of your question again.
I'll answer that question at the end.
If there's something different about the U.S. economy.
Yeah, so it's not that it may or may not be about the U.S. economy being different. I think that this inflation was not the classic demand overload, pot boiling over kind of inflation that we think about. It was a combination of very strong demand, without question, and unusual supply side restrictions, both on the goods side but also on the labor side, because we had a participation shock. So this is just very unusual. And we had the view, my colleagues and I broadly had the view, that we could get a lot of, you had essentially a vertical supply curve, because you ran into the limits of capacity at very low levels because there weren't workers and because people couldn't, the supply chains were all broken. So we had the view that you could come straight down that vertical supply curve to the extent demand reduced, and something like that has happened. It happened so far. The question is, once that part of it runs out, and we think it has a ways to run. We definitely think that the sort of supply chain and shortages side has some ways to run. Does labor force participation have much more to run? It might. Immigration could help, but it may be that at some point you will run out of supply side help, and then it goes down to demand, and it gets harder. That's very possible. But to say with certainty that the last mile is going to be different, I'd be reluctant to suggest that we have any certainty around that. We just don't know. I mean, inflation keeps coming down. The labor market keeps getting back into balance. And, it's so far so good, although we kind of assume that it will get harder from here, but so far it hasn't.
Okay, we'll go to Megan for the last question.
Hi, Chair Powell. Thanks for taking our questions. Megan Casella with Barron's. I want to ask about the balance sheet, given the Fed's focus now on proceeding carefully and considering rate cuts. And can you talk us through what the latest thinking is, and has there been any consideration of altering the pace of quantitative tightening at all?
We're not talking about altering the pace of QT right now, just to get that out of the way. So balance sheet seems to be working pretty much as expected. What we've been seeing is, that we're allowing runoff each month. That's adding up. I think we're close to 1.2 trillion now. That's showing up. The reverse repo facility has been coming down quickly, and reserves have been either moving up or, as a result, or holding steady. At a certain point, there won't be any more to come out of, or there'll be a level where the reverse repo facility levels out, and at that point, reserves will start to come down. We still have, that we intend to reduce our securities holders until we judge that the quantity of reserve balances has reached a level somewhat above that consistent with ample reserves. And we also intend to slow and then stop the decline in size of the balance sheet when reserve balances are somewhat above the level judged to be consistent with ample reserves. We're not at those levels. With reserves close to $3.5 trillion. We don't think we're at those reserves. There isn't a lot of evidence of that. We're watching it carefully, and so far it's working pretty much as expected, we think.
Adjusting that thinking at all by the time you're considering or moving forward with rate cuts? Is that time to rethink, or are you still going to follow that thinking?
So I think they're on independent tracks. So you're asking, though, the question, I guess you're implying the question of can you continue with QT at such time, QT, which is a tightening action, at such time as policy is still tight? And the answer is it depends on the reason. If you're cutting rates because you're going back to normal, that's one thing. If you're cutting them because the economy is really weak, so you can imagine you have to know what the reason is to know whether it would be appropriate to do those two things at the same time. Thanks very much.
Chairman Powell wrapping up 2023
there
and
we
unleashing
go.
a monster rally from New York City this afternoon. Good afternoon, good afternoon. Alongside Tom Keene and
smiling.
Lisa Bramwitz, I'm Jonathan Ferro.
Now it
Here are the
gets
scores
interesting.
in the equity.
So let me answer all the questions. Let's see exactly where we are. This is absolutely phenomenal. Let's talk about it now. Let's break it all down. And let's talk about what we've done here the last couple of years. Let's take a moment to really, enjoy the 2.5 year journey. So we've got lots of questions to answer. And let's break it all down. We've got lots of people watching on 20 different platforms this afternoon. It's quite insane. First of all, we've got a really big audience over on TikTok. Thank you to all of you if you're watching me on TikTok. Links are below on my website if you want to follow me on TikTok. Here is the link. I want to thank all of you for your 2.5 year journey. We got 38,000 followers on TikTok now. Thank you to all of you. There's my links page if you want all of my links to all of the services where we're live. So thanks to all of the 38,000 of you following me over there. I want to thank our Kick audience. Thank you very much indeed. Our Rumble audience, thank you. Our Facebook audience, thank you. Our Stock Quit audience, our X account audience, if you're not yet seeing all my trades before I make them. Let me give everybody the link there to my X account. I post my trades before I make them. I want to thank everybody who's watching me, all my CEOs. We're doing Meet the CEO now from the New York Stock Exchange. Thanks to all of you who follow me on LinkedIn. So I just want to thank everybody who's tuned in today, number one. And we've got a lot of new guests here today. Let me just talk to the guests, tell them exactly what this channel is about, what we've done, but more importantly, where we're going. So I started 2.5 years ago with $5,000. The greatest investment I made was myself. I worked on YouTube for 1.5 years for free, earned no money. I am not a YouTuber. I am the world piano man as voted by Elton John. Here is my music channel. I've toured 195 countries of the world. This is me singing as the Phantom of the Opera with my Vegas showgirls. There's Elton John's jacket when I did Lion King. This is me. I'm not a YouTuber. I'm not here to sell videos. I'm not here to sell rah-rah, noise, content. I built the channel to be a TV station, the best live TV channel in the world that's open and honest. This is my TV channel I built. And I wanted it to be the most honest, real YouTube TV channel in the world, even though we're on every other platform at the same time. A couple of days ago, a few months ago, I said to you we would start meeting the CEO soon. I would invite Sir Richard Branson, Elon Musk on the show. The troll said, "You'll never do it. It won't be possible." Well, you saw me a few days later, live on Facebook, singing the royalty of Texas' homes. I've done Mark Cuban, Jerry Jones, and I did Doug the other night, and I'm meeting the CEOs. We met our first CEO live on the show from the New York Stock Exchange just 2 days ago. After that meeting, the manager of the floor on the New York Stock Exchange prefers my interviews over Bloomberg, over Yahoo, over Mad Money. Why? Because it's real. We reach the world. We have members now in 46 countries. We go out in 14 different languages, and the other mediums are there to sell videos. They are for the elite, and they don't speak to anyone. What we do as we speak to the world. We're going to be at 10 million subscribers. 98% of our live viewers are members, and we're here to help people. That's what we do. And 2.5 years ago, I started to invest. I went through hell, kept going down, learning every day, not selling videos, but going live up to 10 hours a day, every single day, talking to the biggest investors in the world, learning. But I learn everything from you. I've studied human sentiment as an entertainer. I read the audience. I answer every single question personally. I reply to every question. All the trolls that try to bring you down, tell you can't do anything. We have done and achieved every goal we set out to achieve and some, 10 times over. I bought Virgin Galactic at $35, went all the way down, wrote the Virgin Galactic song, changed policy. We now represent 95% of the world's investors, of retail investors on Virgin Galactic. We're now meeting all of the CEOs direct from the New York Stock Exchange. This is the most honest, real YouTube channel in the world. At the end of the day, I go home and I want someone, my wife, to tell me I did a good job. That's it. Nothing else. Not whether I sold videos, not whether I got more subscribers. Did I do a good job? Did I help people today? Was everything truthful? Was it real? And if you invest, the very meaning of the word invest means dig the ditches. When it's down, when it's hard, you research, you learn, you never give up, you find value. We then teamed up with the best algorithmic software in the world, which is completely unbiased. That is, of course, Alpha Spread, what I use here. And they have partnered with me. It's better than Bloomberg reviews. It's better than Yahoo. They're all influenced. It's better than all the Wall Street analysts. We do reviews. Every single one of my show you Virgin Galactic, and we scroll down. Show you Virgin Galactic, and we scroll down. We got the numbers, the balance sheet, the profitability, the solvency scores, and there are all my reviews above Yahoo, above Bloomberg, because they're real. They're based on real numbers. The point I'm making is, if you buy value, if you look for the undervalued stock that is undervalued, oversold, you can't help but make money. So, over the last month, we'll just take the last month or whatever, I am up on my portfolio, as you can see, 31%. I don't know, 100, 200, 300, 400%. The S&P. Warren Buffett, I think Berkshire Hathaway's up like 2% over that period. I'm up 31%. With no options trading, no shorting of stock, just buying companies. Not buying share prices, buying companies. And everything I have done because of you, not because of me. You have taught me with your sentiment. I have learned from the trolls. I have learned from those that was saying you're doing it all wrong. Lucid is a great stock when it's rubbish. When Tilray is a great stock, it's rubbish. When Mullen is a great stock, it's rubbish. I studied it. I found out Dave Mitchery has done it 6 times before. Scam companies. We've got Peter Rawlinson from Lucid taking all the money out to pay himself. Rubbish. Going bankrupt. Erwin Simon from Tilray. Misdirection of the company. Suddenly we're all over the place. Rubbish. Telling everybody we're now buying great breweries when we're buying bankrupt breweries. SoFi, the CEO, talking rubbish. We're going to get rate cuts for the whole of last year. He's a money business. It's to do with money, SoFi, so it's a fintech. Talks rubbish. Analysts making up stories, talking nonsense. And what's his name? Mad Money, flipping Jim Cramer, telling everyone that J&J, get out of it. It's tied up in litigation. Rubbish. All it's about is getting people to watch his silly little program with his Boyer and his silly sound effects. The only person making money is the TV channel and Jim Cramer. You're getting the wrong information. Rubbish. Working Lunch told me a year ago to buy oil. Rubbish. It was wrong. I started doing it. I listened to it. Then I started understanding, learning the rules. I read the balance sheet. I found out that was rubbish information. I waited. I bought the bottom, kept buying the bottom, and now it's going up, and it has been over the last few weeks. Coca-Cola. How many people told me Coca-Cola was overvalued? I waited, and I bought the bottom only a month ago, and now I'm 8.73% up. That's before today. Today it's only 0.9%. The dividends and so on and so forth. I could go on and on and on. This channel, and I'm doing this for those that are new today, the rest of you know this, 98% of our live viewers are members. We're going to be 10 million subscribers. We're going to interview every single CEO on the New York Stock Exchange. We've just started doing it. I'm going to fly on Virgin Galactic. I've got the Virgin Galactic song. I'm holding Virgin Galactic to $100. And I want to thank you. It's been a hell of a journey. From $5,000 with no income for a year and a half. I used to earn 20 grand a night doing sellout theatres. I stopped doing all of that, not out of choice, out of COVID. Built the studio, spent all my savings to build this studio to make it the best studio in the world for on YouTube. You know, over the top on everything. Light, smoke, fireworks, you know what's in here. You see my concerts on a Friday night. And I started learning and investing, and here we are. And I feel really, really good today because finally, it's come good today as a surprise. It's not a surprise. A year ago, nearly a year to the day actually, I said we were in a bull market, and the bank 6 months later agreed we're in a bull market. And they named the date, we went bullish, but it took them 6 months to say it. They knew, they just can't say it, or they don't know. All right, that's the first thing. Then I knew about the rates, not because I'm clever, because I'm not. You're the clever ones. I learned from you. I listened to all of those. Do you remember we had Market Profit would always come in and try to manipulate the market. We had Peru come in, an agency, hiring people to go around getting YouTubers because he thought I was a YouTuber, right? Well, I'm not. I'm an entertainer helping people. You got that wrong. I don't need this. I could go back doing theatre shows. I do this because I love to help people. And it worked. They influenced me. They promised me stuff. They sent me the money for my screen. This screen here. He bought this screen, do you remember? This TV screen here, which is what's being seen on TikTok right now. He sent me money to buy that. They were putting adverts on my channel, getting me to say stuff to promote certain rubbish stocks like Tilray, like SoFi, like IonQ, which was good, by the way, but it was just overbought, and other things like Lucid, for example. And they tried to manipulate me, but they couldn't. They did it first, and I learned, and I learned, and I learned. And I said then that the portfolio, I said we'd do Meet the CEO. I said where Virgin Galactic was going, not because I'm clever or I have a crystal ball, because you learn from the trolls. You learn from the liars, the manipulators, because they tell you everything. Because I answer every question, and I know the sentiment of what's going on and what people are trying to say and what they are saying to me. And we got those people that tried to manipulate SHOT. Remember that? Safety Shot. What a load of rubbish. We researched it. We found out the whole thing is a load of nonsense. What about Nikola? Ridiculous, rubbish. We exposed it all, and it's very, very easy to make money on the stock market. Now it's going to get even easier, but the hard part is to keep it. And those that make up stories and short the stock and manipulate it all will always, long term, will always lose their money. They win the battles, but they always lose the wars. Anyway, that's what this channel is all about. If that's for you, join us. We're here 10 hours a day. I'm not going anywhere. And the other thing they told me, all the big YouTubers who just want to sell videos, oh, you won't last in the in the bear market. I say it's not a bear market. Well, it is. No, it's not. It's going down. You won't last. You'll lose all your money. You'll give up. I said, I won't give up. Oh, yeah, all YouTubers give up. I'm not a bloody YouTuber. I know what it's like. I have toured the world for 38 bloody years. I've never cancelled a gig apart from one when I broke my arm. Never missed a gig. Did two shows a day of Phantom of the Opera. I know how to work hard, and I'm not going anywhere. Oh, you'll give up. No, I won't. You'll give up because you're a bloody YouTuber. I am not. And here we are. I feel very, very happy that we've raised a lot of money for charity. We've built a family. We've achieved what we wanted to achieve. And now we're moving on to be the best, most honest YouTube channel in the world. And we double our growth every month. We should hit 10 million in a few years' time. And our Meet the CEO series is going to explode. I just spoke yesterday to the manager on the floor at the New York Stock Exchange. Says, I'm lining you up with as many CEOs as you want. They want to come on your show. They like what you're doing, and they're going to come on my show. And I'm very, very excited to bring you that information live every day so you can see the actual mind of the company, the CEOs, what they really mean, so you can make informed decisions and you can invest wisely, and you don't have to listen to the flipping rubbish that's being told to you by Bloomberg, CNBC, and all the rest of it. We cut through all the rubbish and bring you the facts. Anyway, thank you for allowing me to splur that all out, because it's been 2.5 years of dealing with rubbish as well as the love I get from this audience. Thank you for all your super chats, your memberships that have funded the show, made it possible. If it wasn't for that, I would have had no money to eat at all. But thanks to you and your generosity, and everyone's a member, I really sincerely want to thank you. And Bill, I want to thank Bill. Bill's on the channel. Bill has bought many people memberships over the last few weeks as a Santa Claus gift. He's a retired war veteran, and he's been buying people memberships and giving memberships away, paying for it out of his own hard-earned money. So, Bill, thank you very much for that. Right, let me read some of the questions. Let me have a look. Now, if you want to get, because they're limited now, if you want to get the Virgin Galactic mug to 100, here it is in the shop. I'll give you the shop. You can see it. Look, you've got the Virgin Galactic to $100. You can for Christmas. If you order this week, you'll receive it before Christmas. But by the end of the week, that is. The Virgin Galactic mug, I'm loving it. The mugs and glasses are signed. Look, can you see my signatures on it? You got the fleeces, the hats. They're all made in your country, wherever you come from. They're made in your country. We've got the crystal ball. Remember, I always made fun. I've got my own crystal ball. There's loads of things here that you can get. The on-tour stuff, when we go and do the meet and greet, when we all get together. All of it. If you want to get any of that stuff, it's there. All right. If you want my newsletter, my Christmas cards, this is my website, martynlucas.com. You can get the free newsletter. There you go. Let me share that with you. Virgin Galactic now 242. We're celebrating. We don't. I've got some questions to answer. I'll do that in a second. You ain't getting a super chat off me today with that profit. Ha ha! Massive congrats and an even bigger thank you, mine. He says, I get super chats when I lose money. How come? You've all made money. Why are you not celebrating? Why do I only get super chats when I lose money? I mean, what's all that about? What do you buy tomorrow? Any ideas? Right, let's calm it down now and let's discuss the strategy, what we do now. I'm loving it. Nothing, Chris. McDonald's coin went from 1 to 20 today. Nobody listened. Nobody listened. Falafel. Exactly. Thank you, Martyn, for all you do. John Granfors, you're welcome. Best honest YouTube channel in the world from Mike. Thank you. We are real investors here. Eduardo, thank you. I got on Virgin Money the other day. Had to break, but space is touching 240. It's 242 now. Martyn, what's your profit on Virgin Galactic? I'm up 49%. I am up 54.49. I bought at the bottom. I declared it was the bottom. I said ahead of time what the bottom was. I must have made 50 videos telling you 150 is the bottom. Not because I was guessing, not because I was listening to some clown on YouTube, because I was speaking to the people at Virgin Galactic. I have worked for Sir Richard Branson. I was sharing you with the information day in, day out. That's why I said 150, and I was within 7 cents of it. And at 157, I went all in, turned on margin, bought as much as I could. As if you were here, you will remember all of that. What a speech. Martyn for president. Raman. Wow. I am up 23.9%, says Queen. I am the oily guy. There he is. What now? I want to be absolutely clear. If I'd listened to Stephen Lewandowski, a member of the family at the time, I wasn't doing that. I was listening to CNBC, Jim Cramer, Bloomberg. I don't do that anymore. I should have listened to Stephen, who's a family member, a friend who cares about what I'm doing, who cares about the information he shares with the family. If I listened to Stephen, I wouldn't have bought Chevron when I bought it. I listened to some flipping liar on working lunch, who's an all-out liar. But there you go. I didn't. So what I had to do was trade out of the stock, and I kept buying it, waiting for the bottom, listening to Stephen, learning more and more and more, and then I bought more and more. So, I'm going to get out of it. I'm going to make money, but that's not the point. Martyn, you're the most entertaining investor on YouTube. Thank you, Bill. Hiya, Bill. Shot is up like 170% since your video. I don't care if it's up 170%. It has no value. The product has no verification if it actually works. The Luke Bryant event, there's no evidence of it even happening. There are some photographs, but there's no information on their website or their social media or any of their official information. We've called them. We've tried to test the product. They never reply to messages, answers, phone calls, nothing. The emails don't even work. You can't invest in that. Just because it's up, Ed, that is gambling. I will not buy a stock that I cannot speak to people at the company or I cannot verify the facts. It's all out manipulation. Flipping heck, you've got Binky Bonk, you've got flipping Pepe coin with no value whatsoever, going up millions of percent. Does that mean it's a good investment? No, it can go back down again. I'm not a gambler, I'm an investor. So I don't care that shot is up, and I don't care if those clowns try to come on my show and telling me, you should have bought shot. Not a bloody chance. I bought with my money, my hard-earned money, Johnson & Johnson, an actual profitable company. I bought Coca-Cola with my money. In fact, I spent $25,000 and bought J&J on margin at 8%. I ain't buying your bloody made-up nonsense on margin. Not a chance in hell. But we've made 170%. Good luck to you, mate. Good luck to you. Now sell it, and if you can't sell it, remember it could drop very quickly. You're going to pay 20% on tax. If you hold it, it won't be around tomorrow. I don't care what they've done. I don't care. Not interested in gambling. Every single person learns from your journey and get the entertainment in making us smile. Thank you, Bill. I'm not in it. You know that. Ed Spitzer, I know. I'm just reading out every comment, as I always do for those that browse through the channel and miss things. It's very important that I read out every single comment. The good, the bad, and the ugly. Always face it all. Right. I said today we would hit 67,000. 100%. 100%, I said it. I said 100%, 67. I said more than likely we'll hit 70,000. We've got 20 minutes to go. Chances are we will hit 70,000, but we smashed 67. I was absolutely right. Not because I guessed, because I've bought undervalued stocks, which now everybody's FOMOing into, like Coca-Cola and J&J and Virgin Galactic. They're undervalued. How do we know they're undervalued? Because we study the balance sheet, and I show you all the reviews of all the stocks that I review and the Meet the CEO to go along with them now as well. I think MSK should have a thank you, as his super chats are massive. Yes, Yes, MSK. It's MSK here. I have thanked MSK hundreds of times, and I will continue to do so. MSK has given me the biggest super chats than anyone, world records. Where is my Mullen underwear and Robinhood socks? Niels, I'm working on it. Robinhood's a 4X. Let me just be clear. Those of you that told me Robinhood was rubbish and it was going down because you lost all your money on GameStop because you decided to follow Roaring Kitty, a person who didn't use his real name, unlike me, who shouldn't have been doing what he was doing as a licensed broker. He was breaking the law. You followed him. The only person that made any money was him and his mates. All of you watching him lost your money. A GameStop was a gamble. It was a manipulated lot of nonsense. And because you got froze out by Robinhood, when I'm glad you got frozen out by Robinhood, Robinhood did the right thing, as did every other broker. The difference is Robinhood had all those that don't understand investing on the platform. So they got the bad publicity for it. And you drove the stock down. You said it was rubbish. You shorted it. And I kept buying it on the way down. And now I'm up 37%. Now you're getting short squeezed and you're going to lose your money all over again. Here's my word of advice. Come out of Reddit. Come out of StockTwits. And learn and listen and read and study for yourself and find out the true value. Learn what a balance sheet is and learn what a good business is. A good business is not GameStop. It's Robinhood, for example. Okay? So stop hassling me with your nonsense, even though I do read every single one. Thank you for everything, Martyn. So far, the best comparing all bullshitters like the Wolf of Dubai, and all he is selling stupid information. Yeah, the Wolf of Dubai was basically buying Virgin Galactic when it kept going up, and all on the journey he blew up his YouTube channel because he's a YouTuber. I'm not a YouTuber. He told everybody how to get rich. I never tell anybody how to get rich. And all he did was make himself rich by selling you training programs. However, when the stock started going down, he stopped doing it. Well, I made more and more videos when it went down. I lost more and more money when it went down. I made friends with those at Virgin Galactic. I've worked for Richard Branson. I wrote the Virgin Galactic song. I ranked #1 in the world for Virgin Galactic and SPCE stock, and learned and lost a lot of money. Lost a heck of a lot of money. But I never gave up because I'm not here to sell videos. And yes, I wonder if anybody will watch him now. It's going up and now he'll tell you how to get rich again. I certainly hope not, but quite honestly, I don't care what he does. We all know he's just in it for himself. Hood uses Galileo, which is owned by SoFi. SoFi will be profitable this Q4. I think you need to really look into them. Grippy, I would buy SoFi. The product is good. The CEO talks rubbish. If they get rid of the CEO that drives the ship and employ Vlad Tenev or somebody else, then I would. But there's many things I can buy. I don't need SoFi in my portfolio. And I won't buy a portfolio where the CEO talks nonsense. Buckaroony, Martyn Lucas Investor can thank bloody CGC for a lack of super chats. Martyn Lucas Investor can thank bloody CJC for a lack of super chats from MSK. I said CJC was rubbish. I told you it was rubbish. I did a review on it. The balance sheet was rubbish. The numbers were rubbish. The debt was rubbish. I told you not to be in CJC, Canopy Growth. I told you 100 million times. Same as Tilray. I don't care that Tilray's up today. It's lost direction. It's going up because Gamblers Anonymous are buying it again. Gamblers Anonymous are buying this today because everything's going up. So Tilray's going up. Excuse me, is this a casino or an investment market? It's going up because everybody's buying FOMO. So suddenly a company that's rubbish is going up. That doesn't mean the company is suddenly great. The company is exactly the same company as it was 5 minutes ago. It's still not going to sell medicinal cannabis in the US because it hasn't got a license to do it. And it probably won't get one for several years. And it's buying bankrupt breweries. So the fact of the matter is, look at the numbers, look at the balance sheet. It's going up because everybody wants to get rich. So they're buying penny stocks and thinking, I'm going to get rich. And if it goes up, I must be right. No, you're not. It's just a band of clowns buying the wrong thing. I am not buying Tilray brands. All right, I'm up 33% on space. Now, space is an investment. Why is space an investment? Because at $1.57, where I bought it, I was buying the cash on the books alone. I wasn't buying the rockets. I wasn't buying the goodwill. I wasn't buying the business. I was paying for the cash on the books. And then somebody would say, but it's losing money and it's going to be bankrupt in 12 months. No, it's not. Not at all. It's got enough money for 2 years. Have you read the balance sheet? And I told people over and over again, right now you're buying it undervalued. That's when you buy it. No issue with debt. Now the debt's going away because interest rates are going to come down and Virgin Galactic are going to be successful. The people that are going to fly, including me, are going to go on the bloody thing and it's just going to go up and up and up. So you're wrong. It will go to about $4 or $5 and then go sideways for about a year because Delta will take a while. But then ultimately it can trade to 100, not because it's worth 100, because it will trade to 100. Richard Garcia, great channel. Thank you ever so much, Richard. Up 43% now on Hood. Congratulations. Robinhood is a Forex. Absolutely 100% is a $50 stock, which is nearly a 5x. No doubt, look at the cash, look at the balance sheet, look at the income, look at the revenue. And before you get confused when someone says to you, oh, but people are leaving Robinhood, the idiots are leaving Robinhood. Those that lost their money on GameStop have left Robinhood. Good luck. Bugger off. Don't come back. They've left. Okay? You need to understand, Robinhood have added more higher wealth investors, real investors that are turning to Robinhood rather than Schwab, Ameritrade, and so on and so forth. And in the UK, everyone's jumping on it. Okay? I know I've got the UK account already, as well as the US one. It's going to be very popular. They've spent the money to get it into Europe. Their capital expenditures are coming down. We've looked at the balance sheet and now profits are going to rocket. So we're glad that the gamblers of GameStop are out. They don't need to come back. We don't need that. We want real investors, and that's what we've got now. So that's why I know Robinhood's going to Forex. Is Kathy Wood on your CEO list? I have a manager on the floor of Wall Street who every time I review a stock, I am giving him the list of what I'm reviewing and he will invite and get the guests on my show. So yes, I plan on inviting all the way up to Elon Musk on my show. And as I do the reviews, more and more people will want to be on my show. And it's a discussion where we get to meet the CEO. Very, very real. Gordon Center, yes. Kathy Wood most certainly would be on my list. SPCE is spicy, said. I mean, I told you when it broke, what did I say? 100 times on every video for the last 6 months. When it breaks it would go up slowly. And as we hit the 3 months barrier, which was 236, it'll push through all the way to $4 very, very quickly. Well, it has. It went through 236. We're at 246 within 20 minutes? Here we go. Nothing to stop it. Now, we need to be clear. There will be profit taking. Some of you will take profits, and there's nothing wrong with that. But I will tell you now, 100%, I speak to 95% of the world's retail investors. They're not selling. And in fact, we spoke to Andy Shovel. Andy Shovel is one of the top investors, retail investors, and I think he's in at like $4. So there are many big investors who are in a lot higher than me. I got in at 157. There are many that are much higher. So they're not going anywhere for a long time. This will set a very good support all the way to around about $4. I think by the end of the year, we could be at $6. Will then fall back to $5. I think they will exercise some dilution. They'd be crazy not to. They said they wouldn't, but I reckon they might, just because it adds extra piles of cash to the pile. So that's what I think anyway. Is Space SPC in the ARK ETF? No, I don't think so. Where would the meet and greet be in the UK? Last year it was in Cornwall. This year I was planning on doing it in Dallas. We still haven't done it. I don't know if we're going to do one now. It's been we've been putting it off. My Virgin Galactic is now 52%. Very, very nice indeed. Fair point about shot, Martin. That's my opinion. It's only my opinion, though. Anyway, Dallas says, Queen of Self-Braiding, why don't you create a fund we can invest in? You can. You can, Sea Lover. You can invest in this show. First of all, Sea Lover, you are a member of the channel. And let me just check, are you a member? Are you a member of my channel, Sea Lover? I think you are, aren't you? Yes. No, you're not. No, you're not. Okay. Well, the founder members are going to get some very special benefits in the future as we really take off. So the membership cost will never go up. It's only a couple of bucks a month for the bronze level. It will never go up. That's my promise to you. But the benefits will go up, and it's designed to make you money. It's not about making me rich at all. It's to help you, right? You know that. You know what I do. I'm not going to go into my perks and benefits now. You all know. You will get more out of it. 20 times back what you put in. And the price will never go up. And my original members, those that hold gold badges, we've got a few people here today. In fact, most of you are gold badges now, I think. Founder members, you're going to get a special perks in the future as we continue to grow. So that's the first thing. Secondly, my founder members and my members will be able to buy my crypto coin when I bring it out, and it'll be a very unique crypto coin. Unlike all the scammers who bring coins out, my coins will be a promise from me that I will never sell it. Number two, it'll be capped. There'll be a number, let's say it's 1 million, Martin Lucas coins. There'll only be 1 million. I will never sell. That's it. So the price can only go up. It can't go down because I won't dump more. I won't sell them. I'll hold it, and I will give you my promise live on the show because I'm not trying to do it to make money. I don't care less. I want to see you all make money and you all enjoy owning and being part of the family. So that's another thing that you can do to invest, Sea Lover, through our show. What was Muttley? Was that Muttley? I don't know, probably. Surely short squeeze is imminent for Virgin Galactic. It's not enough volume yet, I'm afraid. Space is rocketing. Oh my God. Shalka Yelashez, how you doing? My 8,000 shares looking good, Martin. Space, fantastic. I'm very, very pleased for you, Paul. Go Space. Oh, Buckaroony. Sorry, I read that wrong, and I appreciate that. Bless. I bought SGD, and it's up 30%. Good. Go, Paul. Robin Hood month. Robin Hood. What do you mean by that, David? Robin? Fireworks. You want the fireworks. Only get fireworks when we have super chats. If you want to do fireworks, we got to do a super chat for that, Stephen. You know that. My dad says, why buy Bitcoin? It has no value or meaning like stock that makes profits. What would you say to him to change his mind? James, he's right. He's right to some extent. I do believe, though, that Bitcoin or particularly Bitcoin is a digital gold. I prefer to own a mine. I'm going to buy a gold mine soon, as you know. Our CEO we interviewed the other day has just sold me some mine shares today before it pre-IPOs, and all of you can get in on that, by the way, if you want to. Just message me, email or Discord. So I prefer real gold. I prefer the real gold mine, and I prefer businesses that make money. However, it's a bit of a lottery ticket. It does have some use case. We've learned that from Sensei. So it does belong as maybe 5% of your portfolio. That is my belief. So that's why I own some Bitcoin, yes. Go Space, as we said. Robinhood monthly metrics are released in 18 minutes. David Robin, it won't affect today. It'll be next month. Wow, XBI Biotech ETF is up over 4%. James, smart dad, don't change his mind. Martin is a great speaker indeed. Adele Ant. Hey, how are you doing, Martin? Great to see you. Lovely to see you here. I've got, it's the Christmas jumper. Told you. Hey, there's Rudolph. I've got a special prize as well, a gift for all my members as well. When I get to the bottom of the questions, if you had it on earlier, you would have made even more. If you'd had it on earlier, hey, Alex. If Peloton goes down, please don't call me a clown. I will say how it is. Niels, hey, Martin, all is okay. It's nice to see you, my friend. It's lovely to see you too. Martin Lucas Investor. Yes, admittedly, CGC is my gamble stock awaiting legalization. Yep. Exactly. You know why you bought it. You're a smart man. You know it's part of your lottery ticket. Just the same way as I have FFIE. That's my lottery ticket. I have no place buying it, but I certainly don't tell other people to buy it. It's my lottery ticket. I can afford to have it there. I can afford to lose $1,000. It's a lottery ticket. It's not an investment. It is a gamble. That's why it's just $1,000. I get more excited on space once we break over 3 and Newcastle winning 1-0. Great. I love it. Hillary, Patty, long time no see. Hi, Martin. Hope you're now back in the green with Rocket Lab. 2004 is going to be awesome. Rocket Lab, Rocket Lab, Rocket Lab. Yes, I am. I'm in the green. I bought the bottom, 335, even though my average wasn't the bottom. I am very much in the green. And my Roth IRA, I've only got one share on my Roth IRA. What am I talking about? Anyway, yes, I'm up 3.42. So yes, I am in the green. Just wanted to say that I'm so glad I found this channel. Thank you, Martin, everyone, for all you do. Thank you for your support as memberships, as super chats. All of that is what's funded the show and everything. Martin Lucas, with CGC, I'm just gambling on gamblers doing crazy legalization or scheduling news. I know what you're doing, mate. It's perfectly fine. What you think will happen when the market closes? There will be some profit taking, and we're going to go through the strategy in a moment when I get through all the questions. Martin Lucas, World Piano Man and World YouTube Man. Thank you, Bill. Not selling under until $100, Richard Garcia. I love it. Hopefully no dilution. You never want that on any stock. We will have some of that, Chris, but we can afford to. It's okay. Not a problem. I hope I only have 525. Got a scalp trade. Martin, a good laugh with a smile. Yesterday stated Virgin Galactic would reach 245 in one day and it now at 246. Do you believe the shorts are coming? 100%. 100%. There's nothing they can do to stop it. And how do I know it's 100%? How do I know it's 100%? Because I have a privileged position. All of you are looking at numbers, charts, if you are proper investors. However, you're not getting hundreds and hundreds of comments a day on Reddit, StockTwits, YouTube, Facebook, Instagram, LinkedIn, Twitter. I get on them all. And the majority of the comments are the trolls, the negative guys and ladies. And I can see what they're shorting. I understand their sentiment and I relay that to you. They think their negativity will get me out of the stock and scare me off. It does the very opposite. It does the very opposite because I know what they're trying to do. They're not investors. They don't have the knowledge. They just want to get rich quick without doing anything, talk nonsense, sit in dark rooms on Reddit, talk a load of flipping rubbish, join fan clubs and spread rubbish. The trouble is, I'm here now to debunk that information. So the more crap that you give to me, the more I tell people about it, the more I know what's going to short squeeze. You're telling me, and you're not smart enough to realize how daft you actually are, because that's the very point. It's easy to beat those people. Easy. Rights will do well next year, says Chris Pickering. I sold everything because of the hype during Christmas. You sold everything during the hype. You mean what, last year or this year? Realty income. I think there's better opportunities, quite honestly, Chris. But I'll have a deep review of it if you want me to. We're coming up to the bell. I sold everything for hype and rebuy after Christmas. What do you think? I sold everything for the hype and rebuy after Christmas. We are going to get profit taking and we are going to get, what's the word I'm looking for? Tax harvesting, but I'm not selling anything. Absolutely not. Absolutely not selling anything. I'm not paying tax on these small profits. I'm going for 100% on all of my assets. I want them all to 1 to 2x. Here we go. Let's ring the bell. Now then. Oh, flipping heck. Yeah. Damn it. No. Let me change this. Premier. That's okay. 3:30. Gonna make it later. 3:30. That was lucky. Okay, very, very important. I just stopped it. Let's ring the bell. I'll explain what that is in a minute. There we go. Very, very important video. You all have to watch it. If you miss it, you'll miss out some important information. Right, okay. Are you ready? Where are we? Where's my time? 10, 9, 8. I'm all over the place. There we go. 3, 2, 1. The bell has gone. You can sponsor Sends a Crypto Bell if you want to. You can put your name on the bell and links below. Right. Let's go through. Let's tell you about what's going to happen next. And let's look at the strategy. You ready? Okay, here we go. Very, very important. Let me just get to it a minute. Okay. First of all, we're up. It's great. Okay. This is great. There's no surprise though. We're up 68.8. I said we could break would get 67, but there's a good chance we'll be at 70,000. I still think we could do there in the after hours anyway. That's not the point. It's still going to keep going in the after hours. Look at it. It's just going to keep running. So we could hit 70,000 in the next few minutes. It wouldn't surprise me at all. Anyway, let's discuss what we're going to do now. Let's bring it back down and discuss what we're going to do. Potterus is here. Dawn Potterus is here doing her elephant counting. Right. If you want to phone in, the phone line's open. Members can call into the show. You could be live on the show. If you want me to review a stock for you, I will. Right. Okay, let's go. Oh, hang on a second. My wife has got a bit of an emergency. Stay right there. I hope Leah's okay. Everyone stay where you are. Okay, folks, I've got to end the show. My wife needs me. We got a bit of a situation here. So I'm going to end the show. So I'm just going to wrap up what we're going to do. We'll continue discussing everything tomorrow. Everything's... Basically, I just want you to know I'm not selling anything. I'm not buying anything. There will be some trimming off. We're not going to sell. We're not going to buy. We're just going to wait now and hold. There will be some trimming off the stocks. There will be profit taking. That's not an issue. I've got 50 grand of margin. I'm not concerned. I'm holding everything. And we don't want to be FOMO'd in. We've already bought the bottom of the market. We want to stay in. So anyway, I've got to go. Leah needs me. There's a bit of a situation here. And so she's just waiting for me now. So I'm going to end the show. The portfolio is very strong. Virgin Galactic will trim off. It's bound to because people have lost a lot of money on it. Don't care. Don't chase it. Don't FOMO it. Gold is going up. S&P, I'll wait for a pullback. Amazon's too expensive. Apple is too expensive. Next year, energy, undervalue. You can own that and carry that on. Enphase, undervalue. It's a 3x. I'm owning it. Not going to sell a single share until it's at least $300. Coca-Cola, I'm not selling it. J&J, I'm not selling it. Kenvue, I'm not selling it. Chevron, I'll sell it in about 4 or 5%. Tesla, I'm not selling it. Basic, I'm not selling anything, okay? I'm holding everything at these prices. Fantastic. Right, I've got to go. I will update you tomorrow with what's happened here. But what I'm going to do is, I see Ty Redmond has upgraded to silver member. I will speak to you tomorrow. So what we're going to do is we're going to keep you all together with the family. I've got to go. Just give me 1 second. Here we go. So let me end it now. My wife is waiting for me. It's this premiere is right. Here we go. So 310. Let me make it 310, which is in 5 minutes. There we go. 310. Okay, there we go. Right, save that. So what we're going to do now is I'm going to leave you. If you would please stay together in the chat. Continue the conversation. Got a very, very important video about to start. Here is the analysis of Automotive Fundamental full review. This video will go directly to it. Let me give you the link to it now. It starts in 4 minutes. If you go into there, I can keep in contact with you and update you of what's happening with Leah. Okay, there we go. There is the information. Go straight to that review there now, and I will see you back in the morning. I will be able to be in the chat with you during quite possibly though, in a bit. All right, that's it from me. I'm going to run. Going to leave you with that. Thank you very much indeed. Go to the review, be in the live chat. I'll keep you updated and see you back in the morning. It's a great day. Thanks. Love you all. And I'll let you go now straight into that review. Okay. Bye-bye for now. Thank you.